Some people are not paying their student loans correctly, and they're going to end up paying thousands extra while paying for longer. Not you, though. You follow me, Vivian, your rich BFF, and your favorite Wall Street girlie who teaches you all the finance you didn't get in school. If you make more than the minimum payment on your student loans, you're probably thinking you're going to make a bigger dent in your debt, right? Wrong. In fact, did you know that lenders apply your monthly payments to outstanding fees, then interest, then your principal, aka what you actually borrowed, in that order? Meaning, if you do not contact your lender and explicitly state that you want your overpayments to go towards the principal, it's just going to prepay next month's interest. This will push back your due date, but it's not going to save you any money and it's not going to get you out of debt faster. So, if you want to crush your debt, make sure to call, write, or go online and select principal only so your overpayments go towards your original loan balance. And if you want more tips on how to navigate your finances, pay down your debt, and invest like a pro, you can follow me. Some
If you've got more than $10,000 in the bank and you're thinking about investing in e-commerce or trucking automation,
We live? We live. Yes, we are. What's going on? What up, y'all? There we go. What's up, the team, man? Yeah, it's not over yet. There's still work to be done. So, recording's now in progress for those not in the know. What's going on? Tube, what's up? Ernest, what's up? Let's gather around. Still a lot of work to be done. Let's have a sit down. What's going on, y'all? Hope everybody is doing well. Getting ready to finish out the year strong and getting ready for make it strong. 2022, very, very important. Hope you got a chance to check out all the content that we've been putting out this week. We had nonstop content, and we finishing up tomorrow, actually, with our boy T.I. Shout out to Tip. Can you plug me in the Wi-Fi? In the Wi-Fi? Yeah. So, but yeah, today is something that, we definitely extremely excited about. Something that's in high demand. So, it's gonna be one of those things that I'm sure a lot of people will enjoy. A lot of information and a topic that is extremely relevant. So, yeah, we ain't even gonna play around with this. Is Lawrence here? Lawrence, what's up? He's here. Lawrence, what's going on, brother?
Hey, what's going on, guys? How y'all doing?
My dog, everything good?
Good, man. How you?
Man, I'm good. What's going on, YouTube world? What's going on, UILU?
Yo, for those not in the know, we are talking to the young legend, UIL Lawrence, man. We got some breaking news tonight. We had an amazing call yesterday. We're going to have an amazing night. I hope everybody got their dry erase board. I hope you got your pen and your pad. If you had a chalkboard, get your chalk ready. We're going to get into some things today. This is for everybody. We get asked that question all the time. Yeah, we invest in long-term stocks, but the word option has been coming up at a feverish pace. Like everywhere we go, everybody wants to talk options. And a lot of people, depending on where they started following our journey, they might have missed the beginning pieces of it. And so tonight we just wanted to dedicate a moment in time, a moment in history to touch everybody with the beginning learning stages of options and what they are, and debunk some myths and hopefully enlighten people with the information that they can actually use and execute going forward. So that's what we're here tonight for.
Yeah, for sure. So we're not even going to waste too much time. We're going to jump right into it. But as Troy said, what this is, the last Wednesday of every month, we do what we call open enrollment, which is an EYL University class. but it's done on YouTube, so everybody can enjoy and participate in it. And it's like a window into what we have going for EYL University. So this one we did it a week earlier than we usually do it, because obviously next week is the last week of the year, so we're gonna take next week off. But this is something that we have never really had, like a whole class or a whole topic on YouTube devoted to stock options. And as I posted on Instagram today, stock options is a record-breaking year, up 35% as far as trades from last year, but still a lot of people still are losing money. So everybody's hearing about options, and not a lot of people are really fully educated on options. So what we're going to do today is kind of walk you through from a basic level of like what a stock option is and how to invest in stock options, how to trade stock options, and then I guess it go all the way up to advanced, because at the end we're going to talk about, we're going to answer questions as well, live from EYL University. So yes, we have our professor for EYL University, who has been gracious with his time, and we thank him for that. Lawrence, if you tuned into the last one that he did on YouTube, which is on cryptocurrency.
All 223,000 of you.
Yeah, that was crazy. That went crazy. So if you tuned in for that, you're in for a treat tonight. And so, yeah, we're going to jump right into it. But before we start, I just wanted to just let everybody know, once again, that this is a part of EYL University. And for part of EYL University, we have 16 affinity groups. So we have a crypto club, we have a real estate club, we have an investment club, we have, a military club. We have all kinds of different affinity groups that's led by the students. We actually have break bread sessions with MG the Mortgage Guy, which he talks about real estate twice a month. I do financial planning calls. We have a movie club and a book club led by Troy. We have a Facebook group. We have weekly classes, and those classes are archived, so there's over 200 past classes. It's like an encyclopedia. So the best way to really describe it is like Earn Your Leisure on steroids, and it's for people that really want like a hands-on, experience and a hands-on, approach and be part of a community. And it's growing at a rapid pace. 12,000 people in it right now. We got a lot of stuff planned for 2022. We'll talk about that later on.
Some breaking news.
Yeah, physical events and a lot of stuff. So if you're interested, this is the last, like I said, class that we'll do for the year. So we're doing an end of the year sale, 65% off of the annual membership. It's going to be for 24 hours. So if you're interested, I'll put the link in the YouTube, and then we'll also put it in the description. Like I said, we'll talk about that later on. But yeah, without further ado, I want to get this show on the road. So
let's do it.
It's going to be Troy and Lawrence both going to be talking. I'm going to be kind of just moderating the situation. But I know you guys put together a presentation, so I'm not sure who wants to start.
Yeah, I'm going to kick it off, man. It's home turf, so I got to kick it off. So yeah, man, we're going to get it right to it. And I know people love presentations, so we decided to put a presentation together to make it easy for everybody to see. I know people are writing notes. Don't worry, I'm going to leave the slides up there so you can actually see it. Just put a yes in chat. Just put a yes in chat if y'all can see the screen so we know what's going on. All right, perfect. You see that shield, you know what's about to happen, y'all. Perfect. You know that shield. All right, so let's get into it. All right. So here's the question, and I need everybody to honestly answer this question right now. So do you think Apple's price, the stock price, which is currently trading at $175.86, can trade at $200 by January 19, 2024? Put your answers in chat right now.
Got a lot of yeses.
I see for sure. Hell yeah. Right. So based on what you know about Apple, and based on about the economy, you said yes. Like most people have said yes, of course, right? Is this even a question, right? So basically what you've done is you've predicted the potential price of a stock in the future. And that, in a simple sense, is what an option is, right? You just did it for the growth. And we're going to talk about what it is when it grows and when it depreciates, when it falls. There's two types. So everybody got the question right. And so let's keep moving, right? So, like I said, essentially, the future price prediction of a given asset is what you just did, right? Here's the example. The asset was Apple. That was the stock you chose. I gave you the price, what it is now. That's as of today. It might have went down a few cents after hours. The future price prediction was $200. That's the strike price, and we'll show you how we came up with that. And the future date, right? So January 19th, 2024, that's a little over 2 years away. That's the expiration date. And so when I say expiration date, is because you're giving yourself a specific time to have this number be hit. Now, granted, it doesn't have to even hit 200, and we'll talk about why, because there's money that can be made either way, if it makes it to it or if it doesn't. All right, so I need everybody just to understand that piece.
Yeah.
All right, go ahead.
Yeah, so what are option contracts? Option contracts offers the buyer the opportunity to buy or sell depending on the type of contract that they hold. So the chosen asset is at a price set out in the contract at expiration date. So this is key. Options differ from shares. So a lot of people a lot of times get confused in saying, am I making a call or a put, or am I buying or selling shares? So when you're holding options, every option that you hold is worth 100 shares. So you can be a buyer of options, and you can also be a seller of options if you have more than 100 shares. So for every buyer, there is a seller. So each contract is worth 100 shares, which is why you always see contracts expressed. Sometimes you see $25.26. That's really $2,526 per that option contract. So always remember that option contracts are broken up and always worth, every option contract is worth 100 shares. And you have the right to purchase those 100 shares at that expiration date as long as the contract is potentially fulfilled. And so in order for that contract to be fulfilled, the stock actually has to go above the strike price, which we'll talk about.
Yeah, and I want people to be very clear about that. And I put it in bold letters for a reason. They're contracts, they're not shares. So when people buy a share of a company, or we like to say when we're teaching kids, a slice of a company, right, you're going to pay the equities price at that time. So today, Apple was 175. 2 days ago was 171. If you wanted a share, that's how much you would pay. Options are completely different. They're not based on the share, although that does take into account how the bid and the ask is perceived. And we'll talk about how that works too.
Yep. So you have right here a stock option contract is the option to buy or sell 100 shares. So one contract equals 100 shares. So you can buy multiple contracts. You could buy 2 contracts. That would be 200 shares. 3 contracts, 400. And then you take a look, 3 contracts, 300, and 4 contracts, 400. So this is important for us to kind of understand. A lot of times when people are taking a look at option contracts, a lot of times they get confused. They're saying, okay, why am I purchasing this one contract? How is it worth 100 shares? So on the sell side, where do option contracts actually come from? So option contracts actually come from sellers. So you have people who may own 1,000 shares of Apple, and they decide to actually sell you the actual options. Those options actually cost a premium, a select premium. So it's imperative to understand that option contracts are always worth 100 shares, and this is how they're actually created by a seller. A seller sells you that option. You pay a premium, so you pay a price. The seller collects that premium.
Perfect. All right, so there's 2 types of options, and this is for beginners. Obviously, there's more advanced, and we can talk about that maybe a little bit later because I'm sure some people are involved in trading options. But it comes down to 2 for the beginner stage, and that's calls and puts. I'm going to talk about calls really quickly, right? So calls, that pretty much is if you think the stock price move up, you're going to make a call. So a call options are speculating on the price increase of an asset. They are the financial contracts that give you, the buyer, the right, but not the obligation. So you don't have to, but you can buy an asset at a specific price within a specific time, which would be that expiration date. So a call buyer profits when the underlying asset increases in price. So Apple, this is our example. We're going to use Apple because it's the greatest company in the world, right? Apple, if it currently is at $175 per share today, if I'm looking at the future price of it, and I believe that it's going to go up, and the majority of you said that, yeah, by January 2024, it can make it to $200, then I'm making a call on that because I'm saying that the price of Apple will appreciate in that given time. Now, as it appreciates from 175, if I bought that call today, I'm going to make money all the way up until it hits 200. I'll make even more money if it passes 200. And so this is key to know the difference between the 2, right? So if I'm saying that the price is going to go up and I believe in that, and again, we're investing in solid companies, right, that have appreciation and have growth and strong fundamentals, then I would make a call. Now, we got to say this. Investing has considerable risk. And we always stress to people, please, if you don't know how to trade stocks, you probably shouldn't start with options, right? You should probably have a portfolio that has some stocks in it, that some long-term companies that you believe in. Obviously, Microsoft and Apple, we talk about a lot, NVIDIA, AMD, all these companies that are strong, you should have stock in them. And then if you want to invest in options, I think it's a great idea as well. So those are calls. If you think the price is going to go up, you're going to make a call on that option.
Yep. So then we have on the opposite side, puts. So put options. So put options actually allow you to make money off of assets price going down. So put options can be very lucrative. A lot of people always ask, what can you use put options for? So there's been a myth that's been going around for years on top of years where we haven't been in this space, where we've been tricked out of when we think, hey, that the stock market, you can only make money off the stock market going up. But you can actually make money off of Apple stock price coming down, NVIDIA, Tesla, whatever stock, Intel here, you can make money off that stock price actually declining. The increase, so what happens is you pay a specific premium, and if the stock price goes and falls, for example, Intel here, Intel's at $50.62. If Intel then falls $5, you can profit off of that. So instead of you just holding shares, and when you're holding shares, you may lose value of your shares when it declines, you can actually profit and make money. So I tell people that this is a great strategy to use, especially on red days and times of market turmoil. So for example, when the coronavirus first hit, people actually profited off that market downfall. When we saw the markets decline 36%, people just didn't sit in their positions and hold shares and just see their value, their shares decrease. They also use put options to actually hedge against their portfolio. So the reason why I really like put options is honestly because you can actually make money to the downside with a stock going down, and then you can go ahead and purchase. So one of the things that I really like to say about put options is I utilize put options on Square most recently. We've all seen that Square is what came down from 240 and 250, and now it's sitting at about 167 at today's close. So using put options, I was able to profit of trading this stock to the downside. But yes, I like Square long term. So guess what? Now I profited off of making money off that stock going down. And now I had the ability to be able to buy shares at a lower price. But then I also profited from that. So now I actually have money and equity to be able to pour in on quality companies that I'm now been able to buy cheaper. So put options lose value when the stock goes up. So that's key. So unlike call options that when the stock goes up, you're making money, put options when the stock goes up, you're actually losing money on put options.
All right, so I want to real quick because I want people to really catch this, right? And so I want you to notice something here. When I made my call option, look how far out I went, right? 2024, which is 2 years away. When I did a put option, right? If you look here in the example, we only went to March 2022. Lauren, tell them why the difference in time span when we do puts and calls.
Yeah, so like a lot of times if we're taking a look at, how far the market has dropped and went down, we've seen a couple pullbacks here. We've seen pullbacks back here in 2020 where we saw a 36% decline. We saw a bear market that came in 2018. We saw a short mini fall in 2013 and 2015. We saw the financial crisis in 2008. We also saw a downturn in the dot-com bubble. So these downturns have actually been very small. So the timing, when we take a look at the market, of over this 100-year existence of the stock market, 94 years out of the 100, the stock market has actually been going up. So when we take a look, the stock market is going up more than it's going down. So you don't want to be caught in puts on certain companies for long periods of time because you can lose a lot of money.
Perfect. All right, so expiration dates, right? And so again, when we gave the example, we said January 19, 2024. For the Intel example, we said March 18, 2022. And I gave those dates because those are significant dates. They're called quadruple witching. And we said that happens every quarter. So the third month of every quarter, the third Friday, quadruple witching will happen, which means that, and we said this on Market Mondays plenty of times, that contracts will expire. And so when we talk about those dates, those are expiration dates for contracts in March and obviously in December. So an expiration date is the final date on which a contract is valid. So after that time, the contract has expired. Option owners can choose a couple of things. You can exercise the contract, which means that you are going to buy 100 shares, right? So let's say you have 5 contracts. You have the right, not the obligation, to buy 500 shares. And or you can sell the option contract if you haven't made any, if you've made profit, you can take profit there, or you can choose to buy more. So you have 3 things you can do at the expiration date. Here's what we tell people. You don't want to wait to the expiration date, right? You're not waiting to that date to actually make it move. Because, again, when the expiration dates come, a lot of people are selling off and taking profits. You want to make sure that you can make the most as possible. So just keep that in mind. Now, expiration dates can range in length of time from days to weeks to months to years. So we showed you the example, and Rashad and myself, we talk about this all the time. We like to go out in leaps, right? So we like to have as much time as possible for our positions to have their volatility, to have their ups and their downs, for news cycles. And obviously, right now, we're seeing with Omicron, right now, there's pullbacks, right? But we're in positions that are for 2 to 3 years out. It gives us time for it to correct and also appreciate over time. So the longer, this is important, the longer the expiration is also useful. The absolute retains time value, even if the stock trades below the stock price. So it's fine if you don't get to your strike price, as long as it's trending towards your stock price, you'll be fine. So these are just 2 examples of expiration dates. Like next week, December 30th, 2021, could be a weekly, right? So if somebody got into an options position today, that might be a expiration date that they're choosing if they're doing a weekly. Obviously, January 19th, 2024 is years away. So we're talking about a little over 2 years away from now. Again, giving yourself the optimum time, and we're going to talk about Delta and all that, on why that's valuable in data.
Yeah, and I just wanted to add one thing here.
Yeah, go ahead.
Especially when you're just getting into options, guys, I always tell people to buy time. If you're someone new getting into options, first I always tell people, guys, stocks first. Investing in ETFs, investing first is key. I did not trade options until 2 years after me learning about the stock market and studying. So I really want to drive this point home because it's important to understand. I find it that a lot of people are hopping into trading on their second day in the markets, second week in the markets. So I wanted to really tell people and stress to people that it's important to take your time. Take your time to learn the information. Take your time. It's not a rush. Like I said, I started when I was 17. I didn't start trading until I was 19. So I really want to stress that point home. And also, the short-term options for someone that does not know technical analysis, that is brand new, is like going to the Russian roulette table in Vegas. And I'm going to say that one more time. Someone trading short-term options without knowing technicals is like going to the Russian roulette table in Vegas. And I'll leave that one there.
Don't do it. Strictly for linemen, not for freshmen. That's not for freshmen. All right, let's keep rolling. Strike price. So again, strike price is the number, right? Is the price at which the asset can be bought or sold. It is the price that the given asset will appreciate, call, as if you're buying a call, or depreciate, that's a put. And so here's our example, right? Apple right now, again, it's at $175.85. If I'm going to say I want to see it appreciate, I come up with a price or a target number that I'm saying it's going to reach. So $200 would be my strike. If I believe that Apple will pull back, I'm listening to all the reports, I'm following all my technicals and the fundamentals, I'm saying, all right, well, I feel like there's going to be a pullback in Apple, then I'm going to make a put, and so $150 would be my put. And so let's figure this out. This is pretty cool here. Right, so where are we going to get our strike price from? Now, past performance does not always predict future success. But if we're looking at Apple over the past 20 years, right? I know, like we always talk about, let's look at it since its inception. But let's look at Apple since its past 20 years. To your right, if you look at the performance and you look at that column that's in parentheses, right? That is not a mistake. Apple has increased by 53,000% since 2001, right? And so if we're going to make a call, well, that's pretty far out. Let's not use 20 years. Let's maybe use 2 years, right? So in the past, since 2 years, it's going up 150%. This year, it's up 32% year to date. And so even a conservative number, because I know when Rashad calls me, he's going to want a conservative number. Can we say that Apple could appreciate 10% by 2024 each year, right? So that just means that Apple, which is 175 now, if it grows by 10%, it's at 192 by next December. If it grows by 10% in 2023, it's at $211, right? So that means that it grew at 10% each year, right? And that seems like that's something that's very viable to happen, right? So remember, our call was at 200. And so if we just said Apple 200 call for 2024 based on its past performance and a very conservative number of 10%, the likelihood of it hitting 200 is pretty high, right? So that's kind of one of those things when you look at strong companies and their past performance, now you see why you come up with these strikes.
Yep. Yep. So when taking a look, when you're taking a look at options, purchasing contracts, not shares, it's important to understand the difference between the bid and the ask. So this is going to be a pivotal part of what we talk about here tonight.
This is the part.
So because this is what gets a lot of, I already saw in the chat here that someone said Robinhood order fills suck. So we're going to talk about the difference between the bid and the ask. So a lot of people, when they hop into options trading, they're immediately, as soon as they go ahead and enter a trade, they're going to give money to the market. And why is that? Because a lot of people are purchasing options at the ask price. So the ask price represents the minimum price that the seller is willing to take for that same security. The bid price represents the maximum price that the buyer is willing to pay for a share of the stock or another security. You never want to pay at the ask. And Troy's going to show you, we have an example on the next slides where you're going to actually get a chance to see. So a lot of times you'll see like the bid will say 700 and the ask will say like 920. So that's called the spread. So when you hear someone asks you, hey, what is the spread on that call that you're looking at or that put you're looking at? The spread is the difference between the bid and the ask. So if the bid is 700 and then the ask is 920, that's a $220 difference in spread. So guess what's going to happen to someone that goes ahead and uses what is called a market order instead of a limit order? So when it comes to options, you want to use limit orders. Why do you want to use limit orders? Because you're able to go ahead and specify the price that you actually want to get into that security.
Hold on, so you got to tell them that again. The difference between market and limit.
Yeah, so market is just going to put you in at any price. So what's going to happen if you use a market order and there's a $220 spread? You're going to more than likely be down $100 instantaneously. So who wants to be down $100 instantaneously? I know I don't. I know all you guys don't want to. So make sure that you're using a limit order. So what is the best way to get filled with options is to use a limit order. Especially what happens is when you're actually buying out those further out options, the strategies that Troy and Rashad talk about, when you're talking about 2023 and 2024, the bid and the ask is going to be spread wide because there's not a lot of volume and open interest on the contracts, which we'll talk about later.
We're getting there.
So, yeah.
Yeah. And I tell people as simple as this, man. If you've ever bought a car and you walk into the dealership and somebody tells you a price, 9 times out of 10, you're going to say, all right, well, I'm not paying that price. This is what I'm paying, right? And so it's the same thing when you think about these contracts. The ask price is the premium. The bid price is what you're going to pay. You're willing to pay that, right? And if you put it at a limit order, you're saying, I'm not going above that. Now, sometimes the limit will get filled and sometimes it doesn't. This is when we talk about patience, right? If it's not filled, that's fine. You can leave it out for a day. If it doesn't get filled, do it again, right? You're going to stick to your script. That's your limit. You're not going above that. It'd be the same thing like if you're going to buy a car. This is how much I can afford. This is what I'm paying for it. I'm not paying anything over it. The problem is that a lot of people who are new to options come in and they click market, and sometimes it fills at the highest price as possible. In fact, it could say 920. By the time you buy it, somebody's already purchased it, and now it's going up to 940. And so you've actually paid more than you thought. So that's why it's very, very important. This is like one of those keys that people will lose money right away, and they look at their account like, how come every time I buy my option contract, I'm in the negative? This is probably one of the main reasons why that is happening. So treat it like the dealership. Look at the bid. Maybe go 10 to 15 cents above the bid and say, that is where I'm staying. I'm not going above it. If it fills, it fills. If it doesn't, It doesn't. All right, let's get into some things.
Yep. So now we have here, this is TD Ameritrade for those that are new and may have not looked at TD Ameritrade. TD Ameritrade Thinkorswim is one of the most reputable platforms out there for people to trade. TD Ameritrade Thinkorswim is set up like this. This is actually showing you how to actually go ahead and actually execute and buy an actual options contract. So here we have up here, option strategy will start in the top left corner, single order. The underlying symbol obviously is Apple. Also, what you want to know is when you're actually buying options, this is key, action, that action button right there. Whenever you're purchasing options, calls, or puts, it always needs to be on buy to open. That's whether you're on Charles Schwab, Fidelity, E-Trade, whatever platform that you're on, it needs to be on buy to open when you're purchasing options. Now, when you are selling, when you are ready to close your position, it needs to be on sell to close. So you need to make sure that you have it on buy to open and sell to close. If you end up having it in something else, you're going to mess yourself up. So it needs to be buy to open when you're purchasing your options, and then it needs to be sell to close when you're selling your options. Then you have next door, which you're going ahead and typing in how many contracts you're purchasing, either 1, 2, etc. Then you have select your expiration. You had an expiration, so you can select the date. We had the dates pulled up over here, and we'll get to those in a second. Your strike and your, is it a call or a put? We'll get to that. Then also you see limit order. So this
I have it filled in for you.
Yeah, limit order. You need a limit order. And then guess what? Price. You see what happens is when you have a market order, that price box right here won't pull up. Because all you do when you hit market is you just hit review order. Limit order, then you put in price. Also time and force. Day. So you want to keep it on day. If you keep it on day, it'll make sure that it enforces during the day. Now, if that price is at a limit order and it does not enforce at the end of the business day at 4 p.m. Eastern Standard Time, that order will cancel.
Correct.
So,
and that's not a bad thing, y'all. That's not a bad thing.
Yeah, that's not a bad thing. I'm just letting you guys know that if you have an order that's pending and it's in time enforced day and it doesn't execute during market hours, options are only able to be purchased, because I know we got a lot of new people on here and they're probably going to ask the question. Options can only be purchased in between 9:30 Eastern Standard to 4 p.m. Eastern Standard Time. The only options that can be traded outside of that time is the SPY and the QQQ, which can be traded until 4:15 p.m. Eastern Standard Time. So options can only be executed from 9:30 all the way till 4 p.m. Eastern Standard Time. Now, when we take a look at the strike panel over here, turn your direction. You see we're on Apple, January 28th, 2022, which is next month's, the last week of next month's expiring contracts. We see that at the time when the screenshot was taken, Apple was at 171.89. I believe Apple closed at 175.76 today. So taking a look here, you have the strike price here in the middle. You see calls, puts, and then you also see bid and ask. So on the call side and on the put side, and then the strike, that's the strike price in the middle. Now you see a highlighted blue on the left side to the top left, and you see a highlighted blue to the bottom right. So I want to talk about something Shadi said earlier today. If you guys watched his reel, he said something that was really keen, and I wanted to make sure that this was something that I touched on here tonight. Shadi said in his reel, he said, a lot of people who are purchasing out the money options are losing money. So I'm going to put an end to this tonight. Well, why do I say this? Because what's happening is that a lot of people are purchasing out the money options, and out the money options are very, very, very risky, especially in the short term. With leap options, options that have a lot of time, like January 2024, 200, you get a little leeway. But with the trading aspect, when you're buying out the money options, you're actually setting yourself up for failure. So why am I saying this? So out the money options, typically for new options traders, it's like just beautiful. It's like heaven. People are like, oh my gosh, it's so cheap. You mean I could buy this option for, $400, $500, and I could profit from it? And what happens is that there's also a factor in of average true range. So how much does the stock move on a day-to-day basis? So my point here tonight is to really make sure that people understand that you want to focus on buying in the money versus out the money contracts. So these contracts highlighted.
My fault. Yeah, go ahead.
Yep. So these contracts highlighted in the blue here on the top left here in calls, that 170 strike, 167.5, 165, 162.5, and 160. What makes them in the money calls? What makes them in the money calls is what someone's going to ask. Well, the current stock price at this time was 171.89. So what are you actually doing when you actually buy a 170 strike? So when you buy a 170 strike, you're essentially saying, hey, by January 28th, 2022, Apple is going to be above 170. Well, Apple already is. So Apple is considered this contract right here is considered in the money. The 170 strike is considered in the money. So it has what is called intrinsic value. Intrinsic value. Now the 172, 175, 177 are considered out the money. Apple is not higher than 172.5. No, it's not higher than 175, and it's not higher than 177.5. So what happens is that people who are buying in the money options, you set yourself up better. Why? Because some people may say, well, I'm paying more. Yes, it's better to pay more for an in the money option. A lot of times they're buying out the money options. Why? Because on January 28, 2022, a lot of those out the money options will be expiring worthless. And so most options expire worthless, especially out the money options. And so it's imperative that we understand that it is okay to spend more on buying in the money option contracts because it's going to give you a higher probability of actually profiting. And also, guys, the first thing that we want to think about when we're focused on trading options is actually not making money. How do we protect ourselves on the downside? What happens is that if someone was to buy that 180 strike right here at Apple and it's cost about $425 and Apple was to decline $5, that option contract would actually lose a lot more value than someone who has that 165 strike or that 162.5 strike. So why am I saying this? Because when you're having your options in the money, you have what is called intrinsic value. Options that have intrinsic value, what? They actually have higher deltas. So delta is the amount per dollar that you make as the stock price increases. And out the money options have higher theta. So what is theta? Theta is the time decay. So out the money options have a higher time decay. So for anyone that's been trading options before, and it's like, okay, I went and got a 180 strike on Apple, and Apple went up to 172, but I didn't make any money. Why is that happening? Because what's happening is that the theta is outweighing the delta. So you're not making as much money when you have those out the money options. The only way for you to make a lot of money without the money options is when the stock has a drastic move upward. For example, today with Tesla. Tesla went up 70 points today. So the people who had $1,000 calls for Tesla yesterday when Tesla was at 930, they were extremely risky with that. But because Tesla actually went up and increased that much, people actually made a lot of money off of that. So what happens? People are ready to go ahead and grab these out the money options because they're cheaper. What happens with a stock like Apple, which doesn't really move very fast, but it is a consistent stock as we put up on the sheet? Apple is a consistent stock. So what happens is that when these stocks don't move as fast, a lot of people get hurt because they're in out the money options. And the time decay is way too much.
We call that losing your shirt.
Yep.
Don't lose your shirt.
Yep. So you want to focus on really buying those in the money options, especially if you're doing any short-term trading. If you're doing a more of a leap strategy, you still want to stick to buying in the money options, but you can actually go a little bit farther out. It is okay, but you do want to be protecting yourself because a lot of times the out the money strategy is one of those sexy things that a lot of people want to push on people, but we don't want to do that here. We're not pushing sexiness out here. We're pushing consistency. So it's important to be consistent versus trying to be sexy and be cheap. Because the first thing that we had a mindset of coming in is how can I pretty much take the smallest investment and turn it into $1 million overnight. And so out the money land is where most people go. And then out the money land you end up losing all your money. This is just the reality.
Yeah. So there's a couple things I want you to see here, right? Somebody's gonna be looking at this and they're like, "Yo, Troy Lawrence, well, y'all bugging, man. It said it's $7, right? But we told you, and we're gonna reiterate it again, right? Each contract is worth 100 shares, and so our eyes are trained. I know, Lawrence, we have the same thing. Once we see that number, we're moving the decimal twice, and so that's not really $7. That's really $700. That's the bid. It's $700. I'm gonna show you why. And I think this is dope because I took this picture. I think Friday I took this picture, but if we go on to TD Ameritrade now, and I'm sure somebody will do this after they watch this whole class, that 172 strike and that 175 strike are now in the money. And so they're going to be blue when you look at it. And so that's pretty interesting. Another thing is I want you to notice the prices, right? If we look at the price, like that $700 bid, because it's so close, it's a lot cheaper. When we go out further, and I'm going to show you an example of that, when we go out further, right, to like 2024, it's going to be a lot pricier. The reason being is that the likelihood of the stock or the asset, for this example, Apple, actually being 175 or 170 when it's already at 175 now, it's highly likely. So it's a premium on that. So like this expiration date is for next month, but we're going to show you an example of what it looks like in a few years, and you're going to notice the price difference. But I wanted you to just key in on that, right? Like this is not $7, this is $700. This is not $9.20. This is $920. So that's the ask. This is a problem too. Like I get upset, Lawrence, you probably do too, right? Like I'll put a limit order in, and then I'll look at last, and we'll show people what last is. And I'll see somebody fills at 920, and I have my limit at 730. What that does is it messes up the chain for the next person trying to buy a contract. Now I have to raise my limit up because somebody who was inexperienced came and said, all right, well, I'll pay the premium. So it kind of messes up the game a little bit. But we're giving y'all the game right now so that doesn't happen. So when we see that,
and then one thing I want to say is like when the option order doesn't execute, I know this happens to a lot of people, especially people that are not savvy with their platform. And that's something I really want to say is like really learn your platform too, the execution of your platform. It is okay to paper trade on TD Ameritrade, Thinkorswim. Take some practice trades and get used to like the execution part. Because actually buying options like for the first time, I can admit myself, my first time buying options, I had anxiety. Like, was I doing it right? Did the order fill properly? You know, these are kind of some of the questions that we kind of have from a psychological standpoint, to be honest. And so I want to make sure that, you know, people take time to understand their platforms. And if the order does not fill the first time, it is okay to go ahead and refresh that order and re-input that order. So yeah, that's it.
Yeah, and so there's still somebody's like, how did he get 700 from $7? Well, here's why. Again, each option contract is worth 100 shares, right? So if one share, right, if one share is $7 and you're buying 100 of them, then that's where we got 700. The easiest thing to do is when you see the bid or the ask, just move the decimal twice, right? And so that one contract is worth $700 because each share is 7 and you're buying 100 of them. That's how you get 700. Same thing if I bought 5 contracts. Now I'm having 500 shares at $7, which would bring me to a total of 35. Yes, in chat if we good on that. Perfect. This is like when Mr. Millions is like, I got that, raise your hand.
And you know, it's something that, like, if you've been doing options, it's not as hard as it may seem. If this is your first time hearing about options, you may not be getting everything, but that's why everything is all, you know, education, and it's an ongoing process. So it's something that, you know, it's not like you're going to become an expert in an hour. But the more you do it, the more repetition you have, the more information you receive, then you understand that it's really not that complicated. And you start to understand it's like speaking a foreign language. Like you can't learn a foreign language in one day, but you can get the beginning fundamentals of learning that language. And then the more you're around people, the more you study it, now it actually starts to make sense to you.
Yeah, it's repetition. Like every time you come over, you know that this is what I'm doing. And so, like, again, you just get yourself familiar with it. Will you make mistakes? Yeah, we've had trades where we've lost and we've made some mistakes, and I make it very, very clear and very transparent. Like I talk about those mistakes on Market Mondays because I live by that J line, right? Like I went through that, so hopefully you don't have to. But let's keep rolling. All right, so this is what it will look like, right? When you put that order in, you put that limit of $7. This is exactly what's going to look like. So I'm taking one contract at the 172.50 call, It's a weekly, right? Because they're looking at it like that's a few weeks away. Again, I'm doing it for my day, and this is what it equals, right? This is what it will cost me: $700, and then obviously the brokerage is going to take their commission fee, and so it cost me $700.65. That's if I was filled at that bid price. A lot of times you won't get filled at the bid price, but again, be patient. Sometimes you do, right? You might put this limit, the asset might drop in price, and you're filled, and it might go below your limit price. And so that's key to know too, right? So stick to your script, know what your limit is, and do not budge on that limit. Yep. All right, so Lawrence, you want to go here?
Yeah.
So I'm just going to say this real quick. So now I've extended. So it's the same page, still TD Ameritrade, but now I've changed the expiration date. And so now it's not a month away, it's 2 years away. And so now look at the prices for the option calls, right? Like look at the call prices here. This is not $29.50. This is $2,950. That's the bid, right? Because the likelihood of Apple hitting this strike, which it already did today, is very likely. The likelihood of it hitting these numbers are very likely. So when people go out further, yeah, it's going to cost you more because the chances of it happening plus the time that it has to do it are highly likely, and it doesn't work in the brokerage's favor, so they're going to charge a premium for it. But you got it.
Yeah, it's going to be more expensive when you actually buy further options like this for 2024. It's imperative as well that you notice as well that the bid and ask difference is a little bit wider than what you may have saw with the previous slide. A lot of times there's always not really as much demand when it comes to these type of options. We're going to cover that with open interest and implied volatility and volume. That's important to understand that what Troy just said, there's a reason why these are more expensive than previously. These are more expensive. Why? Because it's more likely that Apple actually hits these numbers. Now, if someone is a longer term investor, this may be a better option for you. If you're not someone that is going to do the shorter term trading, if you're someone that's going to do a lot of the longer term trading, this can really be great for you to be able to look at positions like this on companies like this, because this can set you up better. And you're not looking at it every single day. And also the short term volatility in the markets doesn't really affect options like this that's dated out till 2024. And that's important to understand. Those January 28th, 2022, if Apple has a bad day, you're going to significantly see that hurt on your calls. But in January 19th, 2024, Apple has a bad day. It's not going to really affect these premiums. So it's kind of important to understand that you're playing a long-term game, and these cost more money. And so, yep.
Yeah, and I know people hear the word long-term and they think options, and I'm like, well, in the options trading, long-term would be 2.5 to 3 years. And then we'll talk about, maybe I can give away that game today, right? How to turn it into a long-term investment. Yeah, let's do it. Let's keep rolling though. All right, so this is an actual option chain. And Lawrence, I'm gonna let you go crazy here because yesterday you went crazy with this. So I'm gonna let you go crazy. So explain to them exactly what they're seeing here.
For sure. Perfect. So we pulled up now Apple January 19th, 2024. So it's 761 days till expiration. So we have the expiration date, we have the calls, we have the bid and ask spread. So let's take a look. So if you look on the call side here, you have calls listed all the way from the 50 call. So that's a deep in the money call. So imagine people who have been holding these $100 calls, $50 calls, 115, 125. All of these people are now in the money, and they have all the way until 2024. So what does that mean? That means what? They have intrinsic value. So it's important to really understand and pay attention to two things: volume and open interest. A lot of times people say, like, how do I get my strike? Where should I be looking for my strike? Volume. You want to pay attention to the volume. So just because an option is in the money doesn't necessarily mean that that's an option that you want to purchase. You try to look for the options that have the highest volume and highest open interest. Why is that key? Because options increase not just because the stock price increased, but they increase because of something called Vega, which is implied volatility, IV. So the increase in demand for your option can actually cause that options price to actually increase. So for example, in the money, if you look at the 150 call, it has a volume. So what is volume? Let's talk about volume. The total amount of contracts traded at that given day. Open interest, the total amount of contracts open at that given strike. So you have 11,000 open interest. So the amount of contracts that are actually open. So a lot of times, and I see a question that just came in, what is considered high volume? A lot of times, anything pretty much over 500, a lot of times considered a little bit higher on the volume. It also depends on what particular options chain that you're looking at. The S&P 500 is the most liquid options chain out there. A lot of times, how we're looking here, we're seeing like 72, 20, 58. You won't see that on the S&P 500. You'll see volume of 5,000, 10,000, open interest of 20,000 and 30,000. Mm-hmm. The S&P 500 is actively traded.
Yeah, and I just want to note too, right, since we're so far out, you're not going to see those type of numbers. But if we had opened that Apple January 28th goal, you would see those type of numbers, right? So you'll see the 20,000 because it's so, that's very in the near future, right? This is so far out that most people aren't looking at these. But I will say, if you look at that 200, right, you see that volume over 500 right now and a lot of open interest there. So somebody was thinking on the same wavelength that we were when we said, all right, well, this is how we got our strike here. Because if it just does 10% over the next 2 years, each year, it's 211 to be our number, and we went below it. So,
yeah, so, that's key because you want to pay attention to the options that have, you know, a high volume and high open interest, particularly like Troy just said, that 200. So like one thing that I will say is that institutions try to hide a lot of information. One thing that you can't hide is you can't hide money flow. You can't hide where money is flowing into. And that's what you can see from volume and open interest is where is money flowing into. The key to really a lot of times understanding, you know, where a stock is heading to is saying, hey, where are the bets being placed? Mm-hmm. Obviously, we're seeing a lot of bets being placed at that 200 call for Apple. And so the open interest in a volume a lot of times can express and show you that. You're also seeing here similar, you're seeing the bid-ask spread. So you're seeing that difference of the bid, obviously, the price that you're bidding at, the ask, you don't want to use that price. If you get filled at the ask, you're more than likely going to be down instantaneously. So the volume is the total amount of contracts being traded at that given time. Then the open interest is the total amount of contracts actually opened at that time. So, yeah.
Your future is at your fingertips. Take advantage of the flexibility and diversity of futures trading with NinjaTrader, the #1 rated futures broker. Start trading futures today.
All right, so why are people trading options? This is very important. Right? And so a lot of people have heard the numbers. They see some of the percentages. They see people putting up their numbers on Instagram and social media, right? It's because the growth of the option contract is different from the growth of the asset, right? And so this is key, and you have to remember this. Trend is your friend, right? And so the asset just needs to trend towards your call or your put's strike price. And so I'm going to give you an example here, right? So if Apple stock, which trades right now at $170.87, if it grows to $192, that's a 10% increase on your investment. So if you bought the shares or you bought the stock at that number and it grew to $192, that's a 10% increase. If you bought a bid at $7, like we just showed you earlier, and it was filled at $7 or $700, that price grows as the asset grows. So if the bid grows to $10.50 or $1,000, $1,050, you've made 50% on your investment. And so obviously that's a 40% difference. And so people find it way more attractive to be in options because the growth potential is just a little bit more, well, a lot more than you could if you just invested in the asset itself. What's best? Why not do both, right? Why not buy the stock and also have a call or a put to protect yourself and hedge yourself against any pullback on the asset itself? So this is very key, right? That's a huge difference. And this is when it gets people's eyes open. They're like, how do you do 10%? How do you do 100? How do you do 1,000%? This is why, because we get bids and we keep them at our limits and we keep them long term and we are patient with them. We'll let them grow. And we also, this is key, and I want everybody to remember this, right? And this, I'm going to take Charlie's analogy. When you go to the movie theater, before the movie starts, the first thing they do is tell you where the exits are. So I want you to treat your portfolio the same way. Don't get into a position before you know where you're going to exit, whether it's a percentage or whether it's a dollar amount. And so when people ask, well, when should I sell? When should I sell? You can sell whenever you want, right? Whenever your exit strategy was, that's what you should stick to. So if you made 20% and 20% was your exit, leave at 20, right? Now the pain will hurt when you see it go to 100, but you got to be comfortable with knowing like that was my plan. I'm sticking to it. And so people just have to remember that, because you do that consistently. Like, we shouldn't slouch at 20%. That's a great return, right? It's just that people get enticed when they see that, oh, wait, there's so much more potential. But as you get more experience, more seasoned in trading, you'll see that, all right, well, that was my exit this time. What will I do next time? What's going to be my alternative? What have I learned from that investment going forward?
Yeah, and I even wanted to touch on this because I think this is important because it's good to have a daily goal, especially if you're someone who's doing a shorter term options trading. I know a lot of people are. A lot of times your daily goal can keep you out of trouble. And take this from someone that, has lost money trading options in a short term basis before. Sticking to a daily goal and then also having like a goal, like a percentage goal is really, really key. A lot of times we get into these trades and I see a lot of times people are up, 500%, and they're DMing me. They're asking me, what should I do? Should I sell? Like, I'm like, guys, come on, 500%. I mean, I don't know where they're doing that at. Tell me. So the thing is guys, be willing to take profit and don't be greedy. Please don't be greedy. Be willing to take profit. And if you have multiple options and you see a over 100% return, there's nothing wrong with using the 50 rule. What is the 50 rule? So if Troy has 10 options and they've went up 100%, there's nothing wrong with him taking 5 and leaving 5 runners to say, hey, I can take these 5 off the table and I can leave the other 5. So the 50 rule is something that I really want to apply. I apply it all the time. You never lose money taking profits. And I tell people that the 50 rule can really keep a lot of people out of trouble, especially with the short-term options or with the longer-term options, to make sure that you're taking your profits and securing your bag.
So, yeah, that's important. I know, shout out to Ben. That's something that he does, right? If he buys 10 contracts and takes profit, I'll sell 5 and I'll let 5 keep going. And so that's a great strategy. I think that's an amazing strategy. And a lot of people get caught up like, can I sell before my strike date? Before my expiration date? Yes, you can sell before your expiration date. Can I take profit? You can take profit whenever you want, right? That's up to you. But again, create your strategy, know what your strategy is. So when it hits your number, you're okay with it and you're taking profit. There's nothing wrong with that.
Yeah. You do have taxes.
Oh, yeah.
Short-term capital gains tax if you sell a position under a year, and if you keep it for longer than a year, it's long-term capital gains. So long-term
year and a day.
Yeah. Long-term capital gains is lower than short-term capital gains. So that is something to just at least be aware of. Something that you might want to take into consideration. You might not want to take into consideration, but
please do. So Lawrence, I was talking about trends. And I know that people like, well, how will I know the trends? How can I find trends? I gave you the screen. You could take it over. Can you talk to them and show them a little bit about how they can watch trends and follow trends?
Yep, I got you. Perfect. So
I'm going to stop mine so you can share yours.
All right, perfect. Boom here. And let's go. So we have TradingView here. So TradingView. Obviously, I was looking at Tesla today. Big time shout out to Tesla. They rallied back over 1,000. So TradingView is a trading platform for all those that are new. TradingView is a technical trading platform that you can actually use to actually plot and do your charts. I tell people that charting, when it comes to long-term investing, you want to make sure that you're staying on the bigger time frame. So there's some people that are new to charts. There's a book that I recommend everyone to read, and this is Charting and Technical Analysis by Fred McAllen. He really does a great job of actually breaking down. This is a historical book, really breaking down charts for people. So Charting and Technical Analysis by Fred McAllen, a great book. So when it comes, and you'll hear me reference this book throughout this part. So we want to be able to really identify trends. So I always tell people that when it comes to taking a look at trends, we want to start off on the weekly and the monthly time frame. So first, I want to actually use the stock, and I want to use Apple. So I want to go to Apple, and we want to take a look at Apple on the monthly time frame. So as we see, Apple will follow here if we hit this all-time chart. And we'll see that this all-time chart here for Apple, we take a look back all the way to 2008, Apple was about $8 a share. We see it's now at $175. So we've been able to determine that this stock is in a uptrend. So now this is where we'll go down to the weekly time frame. And so the weekly time frame, a lot of times we look for a lot of these trends. And so one of the major trends that really make up charts, and it's covered here in pretty much chapter 1 of this book. Chapter 1 of this book talks about primary trends, secondary trends, but also what makes up a stock that's moving up, higher highs and higher lows, and also lower lows and lower highs. So I'm going to show you examples of stocks that have been making what? Lower lows and lower highs. There's one stock on my mind that I know right off the bat that's been making lower lows and lower highs, which is actually a bearish trend. So if I see a stock on a weekly time frame that is actually making lower lows and lower highs, go ahead and take a look at this visual, and we're going to come over to Boeing. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low. Now we may be going back and making another lower high. We'll see. And so a lot of times when we see stocks move in lower lows and lower highs, a lot of times we see stocks trend downwards. When we see a stock that's consistently making higher highs and higher lows, this is why, for example, the S&P 500, the SPY, which measures our overall market, this is why you consistently see the SPY continue to go up. We've been seeing that the SPY over time has what? Been making higher highs, higher lows. So let's go. Higher highs and higher lows. So this is what makes up a chart. Higher high, higher low. Higher high, higher low. Higher high, higher low. And as we continue to see, this S&P 500 has consistently been making higher highs and higher lows consistently, which is why the S&P 500 is at an all-time high. So charting and technical analysis can help you spot things from far away that are getting ready to happen. So I'm going to show you an example in this book here. I'm going to show you an example of what is called a double top. So a double top is actually covered here in this book. A double top is a bearish reversal pattern. So anytime we hear the word bearish, we're expecting what? The stock to actually go down. So we have double tops. What is a double top? So I'm going to show you a couple companies that actually had double tops. Roku is one of them. And this is how you could spot Roku from pretty much a mile away. You had a double top here, one top here, one top here. And this is on the weekly time frame. So I want to make sure that I'm not going over anyone's head. When you see a pattern like this, a double top pattern, you will see this more often. Obviously, it talks about this in the book. This is the inability of the second peak to actually move above the first peak, and is the first sign of weakness. So what do we see? Textbook definition here. The inability for this second peak to move above this first peak. So this is where we see a double top play out here. Roku, when it had this double top, it was at 488. Now it's at 226. So this is the technical reason outside of just the fundamental reasons, the news that comes out, that can actually really help you be able to see from a mile away what's actually happening here on these charts. You see, a lot of times the news and the technicals correlate together. So anything that happens from a technical standpoint, a lot of times you see it correlate with the news standpoint. If you're going to options trade, it's not just about saying, well, I like Apple. Let me just go out and just buy Apple option. We want to make sure that we're actually looking at stocks in a proper way. I know everyone's favorite on here. A lot of people really love Square. Square is a similar thing. We had a double top pattern play out here. A double top is a bearish reversal pattern. We've seen Square on this weekly time frame. It's actually been moving to the downside. I have a technical indicator here, which is called the MACD. The MACD is a conversion of the 12 EMA and the 26 EMA. These are two moving averages. So the 12-day EMA and the 26 EMA. A lot of times the MACD can help people determine where the direction of price is getting ready to go from a momentum standpoint. So it's key that we're kind of looking at these charts to really see and understand what's actually happening here. A lot of times we're able to identify the trend. So this is where I know Troy talked a lot about saying, hey, I like Square at 170, 160 in these areas. Troy wasn't just saying that for any reason, just because that was a number he just pulled out of a hat. He said this because he's seen something from a technical standpoint. Why? For the earners that have been on here, for the 600 plus earners, big time love and shout out to you guys. You know, I've consistently talked about, guys, even back here when Square was at 230 and 240. I said you would get a better price here. I know Ian said he sees Square going to 130. I wouldn't rule that out either. 130 is a major support level on Square. So Ian, once again, is not just putting these numbers out of a hat, guys. These are numbers where we see from a technical standpoint as well. So what I tell people is that you want to buy quality companies when they go on sale and when they go cheaper. A lot of times you can see that from a technical standpoint. So the arts of charts is really here in this book. Now, I tell people, man, it's important and imperative that they actually read this book. This is a free PDF version for the earners that are here. I'm actually going to go ahead and copy this and drop this in the chat. So this is for y'all. Everyone else, you can go on Amazon and get this book for $15. $15 to basically go ahead and learn how to read charts on Amazon to do this book. So this book, like I said, is imperative, is important, and it's great for you guys to go ahead and start reading and doing some studying. So in part here, when you're taking a look here at Square, I really like Square. Square is a great long-term investment, but we want to buy our long-term investments at great technical levels. Like we really want to buy our long-term investments at great technical levels. And the reason why I say this is this can save us from getting in trouble, especially a lot of times with the options. Now imagine someone buying an option that was, you know, a leap option at 250 compared to buying it maybe at 170, 180. So this is the difference. A lot of times we just don't want to buy things just because, boom, we like the company here. Boom, we want to be able to see, hey, from a technical standpoint, where can we actually see a sell-off? Also, to help as well make sense, you have something that's called a weekly squeeze. So this is something I talk about a lot of times. Microsoft saw a major uptick, guys, when we saw all-time highs come in October for Microsoft, and we also saw it come for NVIDIA as well too. So now I'm going to drop down and go to the daily. So what actually happened here? So we saw a stock pull back to a major support level. So how do I actually get these support levels? Hold
on, Lawrence, for a minute. YouTube, the book costs $15, man. Stop being cheap. Just buy the book. Like, y'all got to stop, man. This is extremely high-level information. This is like on the scale of Harvard or Yale or Princeton. And some of you guys aren't paying attention and you worry about the wrong things and you're trying to get a free link. Even if you're trying to get the free link, I'm sure you can Google how to get the free link to the book. The book costs $15. That's not the most important thing right now. Like, this is extremely high-level information that could be charged thousands or $50,000 for. Like, this is like a college course right here. Like, we don't have to do this. So just pay attention and get the information and stop worrying about the wrong things.
All right. Appreciate that. So the tool that I'm actually using here to actually go ahead and draw is the trend lines. So I actually want to go ahead and erase my chart here, remove my drawings and start from scratch. So for people always have a question is like, how do I start off with, technicals? How can I start off by plotting my points on my chart? What I try to look for is multiple touches where a stock comes to multiple times and actually comes to a support or a resistance. So what is support and what is resistance? So let's highlight that here. We're going to use our trend line tool here. And this is where you kind of want to go over your charts. You're not going to get everything the first time. You want to look back over. So I see obviously here, this at one point, February 10th of this year, of 2020, this was actually an all-time high for Microsoft and the stock pulled back to a support. So boom, I come here. I'm able to get another point and another plot. So a lot of times stocks like to trade at or above supports and resistance. And when a stock breaks above an all-time high or breaks above an important resistance level, a lot of times you see the stock tick up. And so once again, what do you see kind of highlighted here? You see what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So you kind of consistently see that happening here. So what I'll do is I'll go throughout my charts and I'll look for major points where the stock hit and it either broke above or it potentially broke below. And so looking here, we pretty much have seen that this stock here, Microsoft, is pretty much trended up. And Microsoft has been one of the most talked about stocks, obviously, I know on Market Mondays, and been one of the, highly successful stocks of the decade. And so I kind of go through my chart and look for common areas and points and try to plot those out and get those. Right here, you actually see Microsoft right now is at a major support level here at this 316. So we saw it continue to test that 316. And what did you see? You saw it bounce out. So now Microsoft closed today at $333. A lot of times we like to buy stocks long term, or we like to buy our leap options at major supports on quality companies. So
keyword quality. Keyword quality.
Keyword quality. And we're going to talk about the difference because we're going to talk about some of the high growth names that you want to stay away from doing these type of strategies with. But this is how I basically would set up like a chart, trend lines on a chart as a long-term investor, just looking for areas and plots and points where I see the stock has maybe pulled back down to, where the stock has pulled back up to and broken through. And this is where you kind of see the cycle kind of consistently what? So we've seen Microsoft has made consistent higher highs, higher lows, higher highs, a small higher low, higher high, higher low, higher high, and then we saw a higher low. So guess what's going to happen next to Microsoft? Potentially here, not a guarantee, but potentially Microsoft is going to make another higher high, and we'll see if that plays out. So this is like how you can read stock charts at really a basic level, and it can really help you out. I always tell people that this is like stock chart reading takes time to understand, but really reading that book and really taking the information in is going to help you. And the more consistently that you look at charts, it is going to make sense. I'll be honest, I did not learn stock chart reading in a year. So it took me honestly about 2-3 years to really, I would say, master it on my own. Is that to say it's going to take you 2 to 3 years? No, it could be faster. How much time are you going to be dedicated to put into being able to understand and read charts? Also, as well, I want to explain a couple indicators. Now, this is something that's called a 20, 50, and 200-day EMA daily. So a lot of times, and let me remove a indicator that I have here, and I'm going to add on TradingView here, this 20, 50, and 200-day EMA. So I'm going to basically, I'm going to show you guys how to exactly look at when a stock is actually going to move in a downward direction. So a lot of times stocks like to trade in between their 20 and 50-day moving averages, which is this red and this green line. Typically, when they hold this red and green line, that typically leads to positive movement from a stock. What I'm going to show you is that over the past, we're going to all-time chart this, and I'm going to actually show you, and let me stay on the page here. I'm going to actually go ahead and show you how you can actually see Microsoft has actually traded actually above its 20 and 50-day EMA, and has consistently traded above that since COVID. So what actually happened when COVID came? What is the technical reason outside of just coronavirus cases coming, etc.? What was the technical reason for the market actually coming down? We actually saw a break below of the 20 and 50-day EMA, and we came to this blue line, which is the 200-day EMA, and it briefly broke below this 200-day EMA. So a lot of times when we see stocks break below their 200-day EMAs, that's where we kind of see stocks pull back and have a downturn. Now notice, when I mentioned earlier, I talked about when were the few downturns that happened. This was in 2020, coronavirus, but also what happened here. The entire market was down for the last 3 months in September 2018 to December 2018. What happened in these months? Donald Trump went into a trade war with China. He basically raised tariffs of 15% on all Chinese imported goods. Also, the Federal Reserve Chairman Jerome Powell also raised interest rates to a benchmark rate of 2.25 to 2.5%. So the cost of borrowing increased for a lot of companies. The companies were put under pressure because of the tariffs that they had to pay. So your Apples had to pay extra taxes to actually get their goods across seas. So it's important and imperative that we look at this from a technical standpoint, and we'll back test and see. We'll zoom in here. So we saw this was that 2018. We saw the 2020. Now notice a lot of times a stock like Microsoft, look how healthy it is. Every time it's kind of hit its 200-day EMA, it's kind of actually been able to hold. Now, what actually happens when a stock actually breaks below its 200-day EMA? What's happened again here? We have to pretty much, really, we can look at 2010 here. We see a little bit of a breakdown. And you kind of see that what happens. Usually when stocks break below their 200-day EMAs, that's usually where you see the downturns. But when was that last major downturn? We saw, boom, the 2008 financial crisis. We saw pretty much that Microsoft broke below the 200-day EMA. So this is something that I tell people that I look at, especially when I'm buying, a lot of these longer term investments, is I'm paying attention. Now, I want to use the S&P 500. Now, the S&P 500 tracks our market. So from a technical standpoint, I'm going to give you a breakdown of why, and I'm going to remove these drawings here so it's actually clear. I'm actually going to show you why our stock market hasn't corrected. We've actually just been in a major healthy uptrend full of what? Higher highs, higher lows, higher highs, higher lows. We made a big run here throughout this part of 2021. But what's happened here, guys? We've actually just been trading on our 20 and 50-day EMAs. I can show you that we haven't even sneezed at the 200-day EMA, which is sitting here now at 424. So our market is far away from any type of correction. So what do we see here? We saw a break below the 200-day EMA here on the S&P 500. And when COVID came, that's why we saw that 36% downtrend. We also saw this in 2018. Boom, here. We also saw this early on in 2018 as well here. But look, we were able to hold at the 200-day EMA. So a lot of times a great place to buy quality companies is at their 200-day EMAs. We saw here Ebola. We saw the crisis here. So we saw a breakdown in our markets in 2015. The Federal Reserve actually started quantitative easing again in 2013. So we've seen the markets actually push up. Then as well here, we saw a breakdown. But what do we kind of consistently see? Higher high, higher low, higher high, higher low, higher high, higher low, and then continue to move upwards. Now I'm going to show you in 2008, we broke below our 200-day EMA. So guess what? Usually a stock, but since this is the entire market, the S&P 500, we stayed in this downtrend, guys, until we broke back above the 200-day EMA. That's when the markets actually started to move up higher again. Now I'm going to take you back down to the dot-com era. This is why the stock market actually pulled back. We broke below our 200-day EMA. We had a lot of, but also, guys, what do you see here? You see a pattern that I've been talking about. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, and now we've broken out and we broke above the 200-day EMA. So I can apply lower lows and lower highs, and higher lows pretty much to any time frame in any chart. So now,
hold on. That's so much game. Fires. We need fire emojis in the chat right now. I'm like, wait, we ain't talking about this. My God, Lawrence is going crazy right now. I got some too, Lawrence. I'm gonna give him a little game because you took it there. So I think I gotta take it there. Let me take it there in a second.
For sure. All right.
Whole lot of game.
That's a whole lot. Go ahead. I'm gonna let you go.
Oh, my bad.
Yeah, go ahead.
All right, bet. Yes, sir. So I wanted to really show you guys this because when a stock breaks below its 200-day EMA, a lot of times that's when we move into a bear market on a particular stock, or we see the overall markets move into a bear market. So guess what? Look at how every time it tried to break above its 200-day, see how it struggled. So we stayed in a downtrend. Yes, there was political things that happen, certain things that happen in the economy. But we can also combine those with our technicals. And we actually see that highlighted here. We see what? Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, lower high. Now I'm going to blow your mind with this next one. Levels that matter today could potentially matter in the future. And I'm going to show you what exactly ExxonMobil did when the pandemic came. ExxonMobil, all it did was come back down to a 2002 support level. So we saw what? We saw the stock broke below its 200-day, and we saw consistent what? Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, lower high. We consistently made lower lows and lower highs, and we moved down. Now, look at this. This candle, this wick right here, this is a wick. We saw this happen in March 2020. But look at the level where it rallied out of. So a support level today may be a major support level in the future if a stock ever comes back down. So look, all ExxonMobil did was actually come back down here into this 2002 level. So we like to buy stocks at major support levels. Some people ask me, why did you buy Boeing at 110? So all Boeing did was it erased all of its gains and it came back down to a major support level, dating back here from February 2016 and also September 2013. So Boeing came down here in 1 week and Boeing, boom, hit this 100 level. It actually broke, I think it went to 90. But look at this. Here, February 2016, hit that $100 level. Boom, here, September 2013, hit this $100 level as well, too. So this was a major level. We had 1, 2, and now 3 levels. So what can I anticipate if Boeing was to ever come back down to this level? Well, we could potentially expect a major bounce because this is a major support. What qualifies a major support level? 1 touch here, 1 touch here, 1 touch here. There's 3 touches on a major support level. Institutions buy stocks at major monthly and weekly levels. And so this kind of gives you guys a basic technical analysis breakdown of really how you can read stocks at a high efficient level. You don't need 50 indicators on your charts. You can use the 20, 50, and 200-day EMA. This is how I would read stocks as a long-term investor if I'm looking to look at long-term positions. So I'm going to go ahead and stop there. And Charting and Technical Analysis by Fred McAllen. It is a must-get book, a must-read book. If you do not read that book, you're doing yourself a disservice.
A tremendous disservice.
Goodness.
In true EYL fashion.
That's a fact.
You going to throw it back? Throw it back. Pause. Appreciate that. All right, so I just want to go back here really quickly. Just let me go back here really quickly. I'm going to give you some game real quick.
Merry Christmas.
Nah, so a lot of people talk about long-term investing. They're saying, look, if you invest in options, it's not long-term investing. I'm going to show you how you can turn it into long-term investing. And Lawrence, we spoke about this, and you were like, yeah, this is exactly how you do it. And so here's what happened. This is actually in my account right now. So in maybe May 2020, I bought 5 contracts of AMD at a 75 call, right? So it was a call. I said it's going to appreciate. So at the time it was $57. I said, all right, well, I'm looking at the fundamentals. I looked at the technicals. I said, all right, we're in Corona. This is a semiconductor. We love semiconductors. That's why we keep talking about them in here. I'm like 75, that's my call for January 2022. So I gave myself at least 18 to 19 months for this contract to mature. However, AMD has run up. The actual stock itself has run up. And so obviously as the stock runs up, so does my intrinsic value of my contracts. And so that's run up pretty nicely. I think AMD hit a high of 163. Did it get up to 163? Am I correct on that?
Yeah, so it's an all-time high. I want to say like 163.
Like 163, all right? And so remember, my call was at 75. And so here's what I did. I had the right to, right? I exercised the contract. And so if I have 5 contracts, and you don't even have to exercise all 5, I chose to. The key thing is when I exercise, I have to have the money in my account to buy those shares. So here's how this looks. I exercised all 5 contracts at $75. And so 500 shares, right, at $75 because I have the right to buy it at that. It's going to cost me $35,000. Luckily, I had a great year. Okay, so I had the 35, but I didn't have to. I could have just did the 500. It would have cost me 7,500. And I'm like, okay, bet. And somebody's like, wait, that's a lot of money. And that's a waste of money. How is this long-term investment? Well, here's why. Today, if you try to buy 500 shares of AMD, it would cost you $71,500. Why? Because you don't have the option to buy it at 75. I did that, so I have the right to do it at $75. So here's the difference, right? It's right now at $143. I'm taking it, 75 is which my contract was at. So there's a difference of $68. So when I exercise this contract, as soon as I exercise it, each share has a $68 in value, right? So I bought them at 75. As soon as I exercise the contract, those 500 shares now each have $68 in value. So that easy math right there for you. 500 shares times $68 is $34,000. So now the $35,000 that I spend doesn't look as crazy because I already have $34,000 in value as soon as I exercise it. But that's not the best part. Let me go to, let me go here. Let's go to bar chart. Let's go to bar chart. Everybody can still see my screen?
Yes, sir.
Let's look at the history of the performance of AMD, right? Let's look what it's done over the past 20 years. Let's look what it's done over the past 10 years. Let's look what it's done over the past 5 years, 3 years, 2 years. Guess what I now have? I have 500 shares of AMD that I could have for the rest of my life, right? I don't have an expiration date anymore. I now have 500 shares clear and free. What can I do with that? I could pass that down. I could add to it. I could make it another position where I'm like, all right, I want to do 1,000 shares of this company. I heard my brother Ian say, look, AMD is going to be 312 by January 24. So you're looking at a guy who got them at $75 and I have 500 shares. That potential growth, and obviously we speak about semiconductors and supply chain shortage and how that's going to correct itself in either the second half of 2022 or the beginning of 2023. Either way, I'm still going to be patient because now I have 500 shares long term. And so when people talk about options and they say, oh, it's not really a long term investment, it can be if you get the asset at a valued price and it grows over the time of your contract. So it went from 1 foot.
Not showing.
Oh, it's not showing that?
Yeah, it's not showing.
Oh, hold on. I got to share the right thing. New share. My bad, y'all. Y'all can see it now?
Yes, sir.
You see the bar chart?
Yes, sir.
All right, so we're looking at here, 570%, right? We're looking at 2,000%, 1,000%, not dollars, percentage, 700, 225. And so like if just based on that growth, even if it grows 10% a year, I don't ever have to sell those 500 shares, right? I could pass those 100 shares. I can give those 100 shares, 500 shares. And so now that option that was a 2-year option, right, on my expiration date now becomes a long-term investment inside of my portfolio. So that's another strategy like people really don't talk about, but they should. And a lot of times you if you go to YouTube and they'll tell you like 99% of the times you shouldn't exercise your contract. That's true if you're doing short term. But in these rare situations, where the asset has grown and it's hit all-time highs and your contract is so low, it kind of makes sense to exercise it because you have the long-term shares for the rest of your life. This is true, I also have a 510. This is a game I never told anybody this. I have a 510 Tesla call for January 23, right? So I can buy 100 shares of Tesla at $500 today if I wanted to, right? I'd have to have the money. Let's say Tesla runs to 1,500. Each one of those 100 shares has now gained $1,000, right? If Tesla gets to 1,500 at some point over the next 12 months, right? Because it's so volatile and trades like that. Could it happen? Yeah. If it gets to 1,200, guess what? Each share now has $700. So now I have 700 shares that each have gained $700 in value. I'm up 70,000. So these are some of the ways and some of the strategies that you can turn your option contract into a long-term situation. Now, there are some things that you need to know, right? So the money you spent for the contract, right? Sometimes, and a lot of times, and Lawrence, you probably could explain even more, the intrinsic value is lost, right? You don't get the money that you paid for the contract. It becomes part of the fees that you do for exercising it. But when you think long-term, right? Maybe I think that AMD call was like $4,000.
long term, that $4,000 going to come back? Yeah, the market goes up, AMD goes up. And like I said, let's say it gets to 200, 300. I'm sitting here pretty with 500 shares. I'm not thinking about the 3,000 that I paid to actually get the contracts. That's another little strategy. Most people don't talk about it. I'm telling you because I did it. And I did it with Apple too. That's how I explained that last year. I got my 600 shares of Apple. I did the same thing. Apple split. I was like, oh, this is perfect. I can get a 500, 600 shares at $100. Perfect. Now, when it was $127 at the time, I'm like, all right, that's pretty cool. Intrinsic value is there. But now that Apple is run up to 175 and I got them at 100, now you got 600 shares and you just gained $75. And so that's just like another little strategy, y'all.
Yep. Whole lot of game, ladies and gentlemen. That was 90 minutes, man. It's we're not done yet, but it's definitely going to be saved. I've seen some people asking, is it going to be saved on YouTube? Yes, it's going to be saved on YouTube, so watch the replay. We talked about Greeks earlier in the presentation, so everything that you probably have questions about was probably covered over the course of the 90 minutes. But we're going to answer some questions. But before we do, once again, just wanted to just kind of let you guys know what's going on here. So EYL University, we do classes every single week, but we're actually adding something to EYL University.
You want to tell them now?
Yeah.
I'll do my breaking news alert. Y'all ready for this? Okay, I'm letting you do it.
I'll let you do it.
Nah, go ahead, man. That's your thing.
I mean, you know the full detail.
All right, so let me break this down. So obviously, Lawrence has been a part of EYL University. He's been teaching the third Wednesdays of each month. But he said, you know what? I got a calling, and I got asked, do I want to teach? And he was like, yeah, I want to teach, but I don't want to teach at Stanford. I don't want to teach at Yale or Harvard. I want to teach at EYL University. And so who are we not to oblige when we have a prodigy like this? And so Lawrence, I keep saying Lawrence is going to do something special. He's going to be teaching every Monday and every Wednesday starting in January 2022. That's not it, though. Every Monday at noon, he will be trading live with you in EYL University. Live, like actually as the market is open, he'll be in there and he'll be guiding and he'll be teaching as the market's open, trading with you. On Wednesdays at 6, shout out to Ransom Gems, I know that drops. He will be teaching live Wednesdays at 6 to EYL University earners. Every third Wednesday, he will still be doing his class. He is a full-time professor and a contributor to EYL. This is his training day. Everybody put the graduation caps in the chat. Lawrence is officially EYL Lawrence. He's officially part of the team. Everybody give him a warm welcome.
Yeah, I appreciate that. And so, he's definitely a tenured professor. And we do a lot of different stuff at EYL University. We do crypto, we do investing, credit, real estate. So, have different professionals come teach classes. And one of the things that we're going to do for 2022 is have a few people actually teach like more than like one class every 3 months. Like they might teach like, twice a month or even every single week, possibly. So that's something that, is broad range. Like I said, covering from credit to real estate and, of course, stocks, investing. We've been doing that. So it's just, just adding on to that. And we felt Lawrence was the perfect person to, to spearhead that for us. So
I'll be in. You know what? January 3rd, the first one, I'm going to be in there too.
Yeah.
I'm there.
Appreciate that. So,
Ernest, I'm there.
So if you're not part of EYL University, man, I'm telling you, it's the fastest growing online community for everything. It's not just an investment group. It's a financial institution. Cover every single thing possible. So once again, I'll put the link up. Go to EYLUniversity.com. We're running this sale, flash sale, 24-hour flash sale. Might extend it to 48 hours. But
we could do. We can call up some of our group chat friends and have them come as well.
Yeah, you never know who we could get anybody to come. So 65% off, 65% off for the whole entire year. It's like $700 for the whole entire year. And it covers all of those things that we just talked about and more. So if you want to join, click the link. Love to have you on the other side. And we got some physical events 2022, we're going to be doing some things for EYL University. We talked about a couple of days ago. So, we really want to make it more of a community type of vibe. And it's something that we're really looking forward to in 2022, just expanding the vibe. So, yeah, for sure. So part of the class is that, you get to ask questions. So this, like I said, this went a little longer than we probably thought. So the questions might be a little bit shorter, but now we're gonna go to some earners for some questions and, answer some questions for a couple minutes.
The class is going to be, it's 12 noon every Monday, right?
Yep, 12 noon every Monday. And we'll be talking live. So it'll be right in the middle of the market day, catching a lot of people on the lunch breaks in the middle of the day. I figured that'd be like the best time even kill. So yeah,
that's a fact. When we had the conversation, I think that's the best time because people on their lunch breaks, they can actually sit down at their computers, they can actually focus. And so I think that was pretty thoughtful of you. And that's the truth. They think I'm capping, but we really had this conversation. They were like, you should actually teach at a university. And you tell them, you really said no.
Nah. It was like I had the conversation and, my girl, she asked me, she said, could you see yourself teaching at a university? And I said, I couldn't see myself teaching at a college and sticking to, just like a book or something. Like the knowledge that I have, for me, I'm really passionate to share with people because I can see how it can directly change your life. The stock market, honestly, really changed my entire life. So I wanted to continue to change other people's lives. So whatever way I could really give as much information as possible, whether it's hitting people midday, hitting people early morning, hitting people late at night, whatever it is, it's I'm willing to do it. So, yep.
Crazy. Yes, that's Eastern Standard Time, y'all. Eastern Standard Time.
Yeah.
Eastern Standard Time.
Appreciate that, brother.
Let's go to some.
How old are you, Lawrence?
And I just turned 22 in October.
Yeah, prodigy.
When we say prodigy, we really mean
22 years old, prodigy.
Different. All right, let's go to some of our earners. Let's see. Is Jan here? Jan might not be here. Victor, we coming to you. Unmute yourself. You've been unmuted. What's going on?
Don't do this, Victor. No. Don't do this, Victor. Hey, I'm here.
What's going on?
Hey, what's up? I'm actually surprised I got picked, but thank you. So my question was, so I was doing long-term stock investing for a while. Shout out to y'all because, listening to y'all for a year and stuff, definitely learned that's the way to do it and stuff. But looking to get into options and trying that same approach, the long-term calls. But I haven't made the decision to do it yet because right now the market is at all-time high, number one. So maybe waiting for some better premiums. But number two, what's a good technique that you guys use for picking your strike prices? I know one gentleman who was on your on one of the episodes one time. He had said 1.5 times the growth over the last year. Yeah. Something of that sort, and then that's how you choose the strike price. But what do you guys use for choosing your strike prices?
Yeah, so I'm gonna be honest. For me, for example, with a stock like Apple that's at 175 right now, a lot of times what I personally will do is I only buy in the money options. So for me, I don't buy out the money options. I argue against it. So for me, my strategy is I like to a lot of times go at least 2 to 3 in the money. So for example, the stock's at 175. There's obviously going to be a 172.5, 170, 167.5, 165. A lot of times I try to aim to go at least 2 to 3 options in the money. But I also am looking at the volume and open interest. I like to see the options that, have the highest amount of volume and open interest. And those are options that I usually target. Even with the leap options, a lot of times I'll like to get an at the money strike. So if the stock's at 175, I may go and get that 175 strike for 2024. My biggest thing when it comes to options is you want to get the most intrinsic value. A lot of times the out the money strategies, even if you have a leap, for example, I look, a lot of times I look at a lot of people's portfolios. They'll share things with me. The number one loser in everyone's portfolio that I've seen is ARK KKK. That's the number one loser across the board. And it's people who've had leap options on RKKK and they've had out the money leaps. So the thing is that even though you get an out the money contract and it may be far away from expiring, does not guarantee that you're actually going to go ahead and profit. So buying a leap option does not guarantee profit. And what I want to say is that when it comes to your strike price, try to get as close to the money as possible. And if you can't get in the money, try to, keep it at like that 177.5, 180. You just don't want to be leaping and getting 240s and 220s when a stock is at 170. You want to protect yourself. So, yep.
Yeah, I think all those things are key. Always looking at the past performance and calculating, right? Well, I just showed you that the Apple situation, right? We just didn't guess 200. We were kind of saying that because if you take the 10%, if you just look at it moving 10% based on what it's done in the past, I mean, you can kind of get the gauge on where it could be headed. And what I think Lawrence says is important, man. I always check the volume and I always check the open interest because that'll tell you a barometer of like, all right, well, this is kind of where the money's moving for this option. And there's a couple other things that I use as well. I check the history of the option. I know in E-Trade, when you go into details, you can check the history of the option. You can see where it originated. And based on where it's originated, you can get a gauge of where it was at its all-time high. And even when it's there, I'm like, all right, well, I don't want to buy anything at a premium. If the option contract originated at $20 and it ran up to 40, I want to wait till it pulls down to 18, right? Because I just want to have, like you said, I want to have my built-in intrinsic value before I get into the position. So that's another little strategy you can use. That's a lot, Victor. You okay?
Nah, yeah, I was just taking some notes down. That's definitely great, and that's what I've been learning recently too. Yeah, at the money or in the money is just safer, and just guaranteeing that you can definitely secure that you're gonna make some money and not lose that premium.
Yeah, and we talked about singular positions, but I mean the safest thing that we do is we invest in ETFs. Like you can have option contracts on ETFs, and so we definitely have them on XLK and SMH and XLY, QQQ. So we definitely have them on our all-star teams as well. They don't move as fast, but if you get them at the right price, definitely could have some value for sure.
Yeah, I can't say nothing about ETFs after the Apollo. I saw those numbers.
Don't tell anybody. I ain't got it.
No, I ain't telling nobody. You had to be there. What happened at the Apollo? You had to be there.
That's a fact. I ain't got it, bro. You know the rules.
Give me 30 seconds so I can show you the trading strategies that allowed me to become a full-time trader and quit my job 2 years ago while also designing the lifestyle I love with less than an hour of work per day. In fact, if you've been trading for at least 3 months and you still aren't profitable, I'm about to tell you why, because I've been trading for 7 years and I know how hard it is to learn to trade the right way. And I've tried everything from moving averages to head and shoulders, support resistance to wedges, and none of this actually works. And even between that and my 9 to 5, the reality of being a full-time trader seemed impossible until I started learning the secrets of how smart money moves the markets. And once I started trading with them, it got a whole lot easier. And that's how I've been able to travel the world and trade full-time for the last 2 years. Because I started trading with the strategies that were proven to work and just copied what the pros were already doing. And I want to give you that same opportunity, which is why I've created The Vault. The Vault is my free community that now has over 6,000 students in it. And the best part is they're all crushing it. You can see tons of different wins here, and this goes on for pages and pages and pages. Not only are my proven and back-tested strategies inside of here, but also are my 6-figure trading coaches inside as well. They live trade every single week, showing you exactly where to buy and sell. And if that is not enough for you, I've also added in my personal scanners, templates, and tools that allowed me to scale my account past $100,000. I'm giving this away to you for free, so you can only learn to trade the right way, but learn to trade with your 9 to 5, because there's actually a pretty easy way to do it. Now, I want to invite you personally to join the Vault for free, but you have to join now, because I'm going to make it paid soon. So if you want to get lifetime access for free to the strategies that allowed me to quit my full-time job and trade full-time, click the button below and join now. You're going to see a page that looks like this, where you can get for free and get access to my strategies instantly, while also have the chance to watch a 6-figure trader trade live in action every single week. So click the button below, and I'll see you inside for live trading.
The top 1% of crypto traders know something that you don't. Forget technical analysis, DCAing, or spending hours trying to find the next moonshot coin. They're mastering the market with a powerful automated trading strategy known as algorithmic quantitative trading, a sophisticated AI-driven system that executes countless precision micro trades day and night to profit in any market condition. If you're aiming to earn like the crypto elite without the need for trading expertise or having to do a thing, then keep watching. My name is Simon McFadgen. For the past couple of years, I've helped over 900 people start escaping their 9 to 5 and create a passive income that allows them to retire early. I've even traded $180,000 of my own money using the same technology live on YouTube for the whole world to see. So how am I able to help my clients do this? Trading bots. Crypto trading bots are by far the best way for everyday professionals to create a passive income for themselves without having to learn how to trade the stock and crypto market. And if you click on the button below around this video now, it will take you to a short 13-minute training where I explain exactly how you can do this too. This isn't one of those 2-hour boring videos where I just talk about my life story and you don't learn anything. No, this is literally a free 13-minute training. And when you click the button below, you'll get taken to a page that looks like this, where you can register and watch my short 13-minute training and learn exactly how people are using crypto trading bots to fight off rising inflation and build wealth faster than they ever thought possible. If you've ever wanted an opportunity to generate income from home without starting a business, without doing affiliate marketing, Amazon, e-commerce, or learning social media, or any other type of online opportunity you may have seen before, and if you want to leverage the power of artificial intelligence and automation with cryptocurrency without becoming a day trader, this is the opportunity you've been looking for. So stop what you're doing right now, click the button below or somewhere around this video, register for the short 13-minute training and learn how everyday regular people are using crypto trading bots to make money passively. So that's it. Click the link or button you see below this video and I'll see you in the training.
Word.
I appreciate you, bro.
Word.
Yes, the classes for EY University are recorded. I saw somebody ask that question. They're all recorded and archived.
All right, let's go to Melissa Kingston. Melissa, we coming to you. Unmute yourself. You've been unmuted. What's going on? Oh, nah, you got to unmute yourself. There you go.
Hi.
What's up?
Nice to meet you. New in the university, just joined about 3 weeks ago. So I'm just learning everything brand new. Question, if for beginners and options, where and what is the best place to start to invest in options?
Yeah, so like platform wise?
Yeah,
Well, I mean, I guess, I personally use TD Ameritrade. I think I like their user interface. Not to say that, I'm not like saying that that's the only place to go, but that's what I personally use for my option trading. I like TD. I use Fidelity too, but I just like TD's user interface better and a couple other reasons, but I just like TD Ameritrade.
Yeah.
And another question, when it comes to taxes, can we invest as individuals, or we will have to do it through as a brokers, or create a business, work as a business?
Yeah. And so you can do it yourself, right? If you open your own brokerage account, you could do it yourself. That's a good question though. Like a lot of people, and this is something that we've learned over the past couple years or so, is like, look, we should probably maybe start investing from an LLC, because as you accumulate more assets, you want to protect those assets. And so one of the strategies to do is create an LLC and trade out of that. And so that's just another little tidbit that you can use when trading. You saying yeah, Lawrence?
Yeah, it's really good to trade out of an LLC. I personally do trade out of an LLC. It's good on the tax side. I like you can set up trading out of LLC really with TD Ameritrade and most platforms. So I think it's beneficial.
Yeah, and as far as the brokerages, I use E-Trade to trade for the most part, just because I like their interface. And when I have to do research, I use them. I started with TD Ameritrade. That one's very, very, very easy to look at and see and do research as well. Can't go wrong with either, in my opinion. And I also have a Fidelity. I'm blaming that on Shadi. And if you're at the Apollo, you understand why.
Okay. Thank you very much.
Appreciate you, Melissa. Where you from?
I'm from Panama, but I'm in the United States.
Love it. Shout out to all everybody in Panama. Shout out to our boy Panama.
Yeah, shout out to Panama and Panama, and shout out to all the Panamanians in Brooklyn.
Thank you.
Have a good night.
It's saying bye.
All right. Let's see what we got. I'm going down the list here. Let's go to Brandy. Brandy, we coming to you. I'm telling you in advance, Brandy, because we coming to you. Unmute yourself. You've been unmuted. What's going on, Brandy? She's like, no, not me.
Guys, what you guys doing?
Oh, Brandy?
Well, actually, I'm using it's my wife email, so it's it's all good.
Gotcha, it's all good. Love it.
Yeah.
What's your name?
Yeah. My name is David. David.
What's up? All right, David. What's going on?
Yeah, man. Well, I just joined you guys. I think it was like 3 weeks ago. And
Welcome, man.
I love you guys, man. You guys do good work. I'm telling you, man.
Appreciate that, brethren.
Yeah. I joined E-Trade. I'm just asking like a question right now because I joined E-Trade a few months back. Few months back now. It's like I'd say like 6 months or so. And when I go in, I join it with $500. Okay.
Mm-hmm.
And you end up that I earn a lot on that. I earn like probably $500 and some dollars because when I go and check on it, it was at $1,000. And what I want to ask you guys, if I want to say I want to like make an exit, how do I go about doing that?
How do you exit out of your brokerage account or your trade?
Trade.
So how do you sell it?
Yeah, you bought stock or like what you did?
Stock
Yeah,
or option?
I bought them stock. Yeah.
Oh, okay.
So you just sell.
Yeah.
Go to the sell feature.
Just sell.
Yeah, just sell it.
I'm really new to this. I don't really.
All right, listen. I'm gonna help you out since you knew. Don't even worry about selling it. Just hold on to it. What company was it?
It was it was GameStop.
Oh,
And
GameStop. All right. Lawrence, I'll let you take this one. What do you think about GameStop?
So the real technical reason why GameStop is up as much is it's a low amount of shares. You had a lot of institutions who shorted the stock. In my opinion, I would sell GameStop. So I would go ahead and take the profits. I know a lot of people said it's going to 1,000 and this and that, but I don't want to rain on anybody's parade, but that ain't happening. So yeah, I would sell it. I think you said you're in E-Trade.
Yeah, E-Trade. Yeah.
Yep. So I would go open up and actually hit open order. Go ahead and hit the sell. And actually, if you want to even call the broker, you can actually call customer service and get a broker on the line, and the broker can actually do that transaction for you and go ahead and clear that. So if you don't know how to do it, just call the customer service, say, can I speak to a broker? Get the broker on the line and tell them, and they'll go ahead and execute and sell those off. So I will just, that's what I would say to do. And then in the meantime, make sure that you're tapping in here. And we'll go over, order execution and things to really kind of help some people out. Because I realize the biggest thing is a lot of people know what moves they want to make, but as far as the actual execution, so that's what I'll be here for, to help with that execution. So make sure you're tapping in here as much as possible.
Okay.
David, appreciate you. And that's another thing with E-Trade too. I'm glad you said that. The customer service is really good, like really, really good. I had some issues with TD Ameritrade. They had me on hold for like 2 hours once. E-Trade, they respond either through email or like they'll send you a message through text or something like that. Pretty fast. So Shout out to E-Trade. All right, let's go to Yasmin. Shout out to Brandy and David. Yasmin, we coming to you. Unmute yourself. You've been unmuted. What's going on?
Hi. Can you hear me?
I can hear you. What's going on?
Okay. So,
Wait, hold on. You got the background.
You got to turn the Jodeci down a little bit. Turn Jodeci down a little bit.
I'm sorry. So just like can't get so much of that quick. So just like the other guy, I'm new to the EYL. I appreciate you guys so much. And I look forward to Lawrence teaching us, because that's exactly what my question was, is that I download Webull and Coinbase to start my trading with, but I don't know what to do, so I'm going to be following.
That's perfect. You're in the perfect place.
Execute.
There you go.
Yeah, you're in the perfect. I said you're in the perfect place. And so you have an account open already? Are you chopping up?
I do.
Okay, perfect.
So I'm in there. I'm ready to go.
Get rid of Coinbase. Yeah.
Get rid of. I heard. Now I'm like, that's actually where I put most of my money. So now I'm like, how do I get out of there and transfer it to Webull or someplace else?
Yeah, so one of the biggest things, and I'll definitely be bringing this to the university as well too, is making sure that you have a ledger. Like I stress the importance of leaving no crypto on any platform. Coinbase, Crypto.com. It doesn't matter the name of the platform. You need to make sure that you have your own cold storage wallet and secure it on there. You don't want to leave it on any platform. I've seen year after year since I've stepped into the crypto space in 2017. I've seen year after year people getting accounts hacked, people taking people's money, and it's just not right. So do not buy a ledger from Amazon, only on ledger.com. And that's something that I'll be bringing to the university, of making sure that we're properly securing our crypto. Yeah.
All right. Thank you, guys.
Appreciate you, Yasmin. Have a good night and happy holidays.
Same to you. Thanks.
All right. Let's see. How many more you want to do, man? Let's go to Tiara. Tiara, I'm coming to you. I hope you're ready. Unmute yourself. You've been unmuted. Tiara, what's going on?
How y'all doing? This is so exciting to be on here right now with you guys. I just want to say I appreciate everything you do. I've been trading options for a little bit, and I know we talked a little bit about the Greeks, but I was wondering if we can go into it a little more.
Yeah, so
Notepad's ready. Here we go.
Yeah, so let's get into it. So, all right, so you got delta. So delta is the amount per dollar that you make when the option increases. Theta is the time decay. Theta is the amount that you pay per day to actually hold that option. So the 2024 call options have less theta. So the thing is that when you're losing money because of theta, so this is why when you buy an option, let's say you buy a call option on Apple at 170, and let's say Apple goes down to $2 to 168, and then it comes back up to 170. Some people think that they're going to be back to even. That ain't going to happen. The stock is actually going to have to go to potentially maybe like 171, 170.5 for you to actually be back at even. Now, the thing is that the main Greeks that you want to focus on is that in the money options actually have higher deltas. In the money options have higher deltas and lower theta. Out the money options have higher thetas and lower deltas. So that is one of the main things that you want to focus on. Now, other Greeks that we want to talk about. We want to talk about Vega. Vega actually is what makes up implied volatility. Implied volatility is IV. So people make money off of options. So, for example, Troy's options that he had on AMD, the 75 call, he made money not just because AMD's stock price increased, but also the IV increase. What makes up IV, which is also equivalent to Vega? It's actually demand. What makes up demand? Demand, open interest. I will say this, open interest and volume. This is really key. Open interest and volume actually makes up demand. So I tell people this a lot of times. Demand will actually bid up and actually push your options contracts value up higher. So you have open interest, you have volume. these things tie in with Vega, which is IV. Vega is a Greek. I tell people that this is really, really important for us to be paying attention and watching. Vega is key, is a key Greek. Delta is a key Greek. Theta is a key Greek. And then also you have Gamma. So Gamma, when you take a look, Gamma is what actually influences the change of price of Delta. So Gamma actually influences that. So when you hear people say, oh, a Gamma squeeze is about to happen, this is where I say a lot of times Gamma squeeze comes when stock prices push up, and a Gamma squeeze can push that Delta actually higher. So this is key when paying attention to the Greeks. The quickest way to really understand the Greeks is when you buy in the money options, you actually have less theta. And so who actually makes money off of theta? People who sell options. So this is key. I'm going to give this gem away. People who have more than 100 shares of any company can actually sell options, and they make money off of theta. So when you're losing value because of theta, understand that the seller is actually making money, which is why what? I tell people, when options expire worthless, there was a winner. The winner was the seller. So option contracts, when you buy, are actually theta negative. But actually, when you're a seller of options, they're theta positive. So what does that mean? So theta positive means that you actually gain value from actually selling options when the strike price, when you actually go further away. So this is kind of like giving you an idea of the Greeks. We're going to talk about in the money and out the money options a lot here at EYL. So, yep.
Yeah, so those are like covered calls and spreads and things like that. That's more of an advanced conversation. But yeah, I mean, he's giving you the game already.
There you have it, ladies and gentlemen. You can tell he knows his stuff because that's stuff that, he just, thank you, Tiara, off the top of his head. It's not like he's like reading the script. So, going through all of those Greeks and giving detailed explanations, got to really study this stuff. So, obviously dedicated a lot of time to learning the language of investing is very, very important. So let's get one more question before we wrap
it. Do it. They like, he's really 22? Nah, he's really 22, y'all. He's really 22. Let's do this. Let's go to Wesley. Wesley, we coming to you. Unmute yourself. You've been unmuted. What's going on? No fridge breaks. It's going on at 10 o'clock out here in New York. No fridge breaks.
Hey, how's it going, guys?
What's going on, Wesley?
What's going? Definitely appreciate y'all. I caught the Black Friday sale. So I'm fairly new. I'm trying to catch up. Definitely with the break you guys got going. So my question is, with the class Lawrence is going to be doing, is he going to be like starting from the beginning as far as like I know you guys are doing like stock option today, which is more like advanced. People that has been trading, but are you guys looking to do the beginning part of it, like stocks, and then moving on up like as each class goes along and things like that?
I'll take the first part and then I'll let Lawrence answer. So part of it is that we have a club. So we have an investment club, a stock club. And so he's part of that as well. And so it's a whole community of people that are learning on the fly. And it depends on what stage you're at. And there's a lot of people who are at beginner stage, like you said you are. So it becomes a community. Inside that community, there are people giving information and helping you along the way. Obviously, Lawrence is going to be there as well. I'll let him talk about what he'll be doing. But you got to remember the community aspect of it, too. Somebody is sitting in front of their computer right now, sitting in front of their TV right now with the same thought process, like I'm a beginner. And so when like-minded people come together as an individual, as a collective community, it's a very special thing here at EYL.
But I'm sure it's going to be different classes, too. So, it might be a beginner, definitely probably going to be a beginner's class, a beginner's class, a charting 101 class, because everybody's at different stages. So, a mix of, advanced, and then also beginning level as well.
Yeah, because I say that because right now I'm mostly invested in crypto, and now I'm looking to step into like doing stocks as well, because I've just been taking a lot of notes, especially from the last Market Monday class, with the ETFs and the stocks that you guys are heavily invested in. So I definitely got my notes, and I'm just looking to keep up with the train. You know what I'm saying? You know, along with everything else. You know, because I do have kids, and I'm looking to make sure that their future is definitely looking bright. You know, as I'm making these moves, and I'll be able to teach them along the way. So
Yeah.
you know, so that's why I asked.
Janet just texted me. She said Wednesday's classes will be for beginners.
Wednesdays?
Yeah, it's
Wednesdays.
called
Wednesdays at 6.
Investing 101.
Wednesdays. All right, cool. Oh yeah, and last thing, you know, I'm definitely from New York. You know, I've met you guys.
Monday, y'all.
Welcome back to Market Monday,
Yes.
ladies and gentlemen.
September
much to talk about.
9th.
For sure.
Yeah.
So much to talk about, man. Yeah, this is going to be a very informative episode.
Yeah.
Ian, you back home?
I am. I may be having to leave if a hurricane come.
Oh, yeah.
There's some talks?
Yep. I'm finna season.
Yeah. Time.
I go. Sorry.
There you go. All right, I'm gonna keep it short. Shout out to everybody that took advantage of that stock club sale.
Yeah.
Everybody should be entered, and I think you dropped some prices over the weekend, right?
Yeah, 94 prices. So go set your alert. The NVIDIA low at the bow price. It's gonna be spicy at that election debate. NVIDIA, it's joy.
Speaking of the election debate, we're going to do something special tomorrow.
Breaking news alert.
We're not going to drop an EYL episode because it's a very important day in history of America with the election debate. So we're going to do a debate review. 10:30 Eastern Standard Time. We are going to live stream. Maybe we'll have some of our political friends join us, and we will dissect what the politicians said, what it means for you, the economic implications. Should be good. Spirited conversation. It's the first time that we've done this, but I think it's important, leading into this presidential cycle. This might be the only debate that they have, they said. Mm-hmm. So 10:30 Eastern Standard Time, set your alarm. 10:30 p.m. Eastern Standard Time, we are going to do a post debate. And if the debate runs a little bit longer, we'll gauge it. We'll push it back a couple of minutes, but we'll do right after the debate ends. Join us here, and we will be dissecting most important topics from the debate. I'm interested to watch the debate myself. So yeah, that's going to be tomorrow at 10:30 Eastern Standard Time, and then of course Blackout back this week. A shout out to Ian, Master Investor. Always shout
out to you. You did.
Yeah, I did.
My boy got the best ad libs since that Jeezy. Yeah. Ooh.
Oh, and on Blackout, we will be covering the Lil Wayne controversy, Super Bowl, Kendrick Lamar, Jay-Z. We will be covering that in detail because that needs about 15 minutes. So we're going to be covering that in detail on Blackout if you're interested in hearing our take on that, because there's some business lessons.
That's a bunch of business lessons in there.
There's some personal lessons.
There's some
vendettas. Drake called my phone.
Yo, Six. Everybody in the Six. Shout out to my brothers. Shout out to my brothers, and shout out first. Obviously I'll cover, but congrats to Kendrick, man. Hell of a year. Well deserved.
No round twos. My boy.
Just salute God. It's us. And like Charlamagne said, man, every year we're highlighting our talent. So I from that standpoint, I could appreciate
salute
that.
Ain't that wrong? I think that wrong for leaving Weezy off that bill, though. But we're going to talk about that. We're going
to talk about it.
That's what's behind me. That's easy. I might have to call him. I'm calling him.
Shout out to Weezy.
I'm gonna do one of those.
Bring that boy on stage, though.
Salute to Hov. Salute to Hov first and foremost. Shout out to Hov. Shout out to the whole Rock Nation.
That's a fact.
That's
a fact.
Shout out to Hov, man.
When you're in position of
power, the whole team, man.
When you're in position of power, you can make the moves. Throw it up one more time. We're just gonna freeze frame it.
40-40. Shout out to the 40-40.
Yeah. Shout out to the whole team.
Shout out to the whole nation.
Rock Nation.
Rock La Familia. We're gonna go back. Everything Hov on. Shout out.
Rock Distribution. Shout out to everybody.
Yeah, that's a fact. Ian, any announcements on your side?
If you want to get rich, go to eatinvest.com. Thank you to everyone who joined. Prices are in. For those of you who may have bought before, if you lost access somehow, you'll be re-uploaded so you have access tonight. But if I made you money, please put yes in chat. Once again, thank you all of you who have joined. Set your alerts, and then our actual call will be this Wednesday at 9 p.m. Central. So it's a lot of conversations to be had. So we're going to do a quick one on Wednesday, then watch Blackout. And if I made you money, please put yes in chat.
Amen.
Stay on the right side of history, too. I'll say that's lesson one from the whole Kendrick fiasco. Stay on the right side of history.
That's a fact. Any disclaimer?
On the right side of history. That's great. Y'all know how this works, man. This is our disclaimer. Please continue to do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you hear on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Continue to do the research, continue to share the research, and when it's great and you make some money from it, spread love. Give some credit to the people you found it from. Continue to share it.
For sure. Subscribe to we have a Clips channel called Earn Your Leisure Clips. So going forward, all of the small segments, 5 minutes, 10 minutes, that's going to be on that channel. So subscribe to Earn Your Leisure Clips if you're interested in the micro content on YouTube.
Another great business lesson. The best advisors are people who are not fans of the brand. Thank you. Por favor.
Appreciate you. All right. So a lot to talk about. But first, let's go a little off script. ASML is a company that's very important in the chip ecosystem. We haven't really talked about them a lot on this program, but they do hold damn near monopoly on the EUV technology, and a lot of companies actually get their tech through. They're like one of these companies that's like a gateway company. And during the pandemic, they ran up crazy during the pandemic. But they're down 30% from a high of 1,100 to around 750. So we've talked about NVIDIA. We talked about NVIDIA a lot. We talked about TSM. But ASML is another one of these chip-making equipment companies that's vitally important to the ecosystem. Like I said, they almost have a monopoly in their niche. So what is the prognosis for ASML?
No one wants to say it, but we are in a chip recession. So everything is coming down. NVIDIA, once it didn't over-deliver on Blackwell, which I think they will next year, it brought the entire space down. I can see ASML going to 672.72.
Oh, what'd you say? ASML 672?
Yeah.
Okay.
Very probable. So that would be one area I would look to load to both. If you were at InvestFest, tons of value. I gave you 8 levels where to get in on stage live, and a 9th one as a bonus. Because shout out to you who asked, well, what's another level? You can plot how to map out your own levels there, or you can go to eatinvest.com, get the replay, or go to investfest.com and get the replay and see how to map these levels out for yourself. But we are in a chip recession. If we look back even 2 years ago, they were at 388. To go from 388 to then 1,100. In order to have exponential returns, you have to continue to deliver an exponential product, which they have done. But once you miss one revenue beat one time, we're going to have a pullback. So I think we're just correcting to the levels that it should be. But do they have a legal monopoly? Absolutely. It's one of the ones that we haven't talked about on here a lot. Absolutely. But I've talked about it endlessly in Stock Club. So 672.72 is where I will look to build a position if you're new into it. And let's be honest, like a stock can't run from 200 to 1,200 and then continue to go to 2,400. Like you're outside of mathematical probabilities and mathematical laws. Like if a stock goes up 500%, another thing I talked about on stage, knowing where to take profit. If you hit 5x, let the rest run, back to the position, and you'll be A-okay.
Yeah, ASML is something, we spoke about, and I'm glad you said you spoke about it in Red Panda. We definitely spoke about it in our calls in EYL. We spoke about it here first on Market Mondays, and now I'm glad that we're bringing it up again because it's important so people can understand how this works. Yes, NVIDIA has chips. Yes, Taiwan Semiconductor is the one that produces it, but there's a machine that creates those chips. And so ASML, in a sense, when you say monopoly, it's because they have the technology right now that can create the nanometer chips for TSM to now provide NVIDIA. And so they're not American. And when we're talking about imports and exports, these things come into play. And so if it's a Dutch company, and so if you figure if it has to ship to China, if it has to ship to America, and there's geopolitical tensions, they're going to be affected directly. On top of this, a company like ARM comes into the space, and now we're looking at this as, hey, maybe they're not the only player inside of the space. But when you see, obviously, companies pull back, and it's one of these cases where we watched NVIDIA get pulled back two weeks ago, and it was like, well, why really? The guidance is there. They're telling you guys to turn them out. We just saw a Broadcom report last week, and I put some numbers in on Broadcom, and we watched them pull back, and the guidance is there, and the revenue is there. So what? We talked about it. September is a volatile month. It's a rough month. Over the past 10 years. Yeah. Out of all the months in a calendar year, over the past 10 years. And so we're in September. We talked about quadruple witching. We talked about rate cuts last week. All happening. You're seeing semis which have led for the past 12 months. They're slightly pulling back. Does this mean that they're going anywhere? Absolutely not. Does this mean you shouldn't invest? Absolutely not. But you got to pick your points. And we're getting to some of those levels where it's like, all right, this is a good position. I'm glad you said the number 672. Good number to be in it. But if you're looking at it long term, the dollar cost averaging anyway. And so it's one of those companies that we put it on our watch list. I feel like we did this in maybe June of 2020. So a lot of people maybe have had that run up and celebrated from that run up. But yeah, I think it's something you still stay in. It's a company that is definitely going to be a part of the ecosystem when it comes to AI, and definitely when it comes to making chips.
Continue to hold for the long term. Stop buying things when they're at a hype or high, and you'll be okay. Like, no company will defy mathematical averages. You can't go up 14x in a 4-year period or 11x and then not have a retracement. These are the areas in which you should be looking to buy. If you are not disciplined, you're going to die. But if you are disciplined, you'll profit. I think it's that simple. But yeah, I think they have a monopoly because they are really the supplier to the rest of the chip space. And the Dutch, they know a lot about that import-export business, don't they?
So they would. So
that's crazy.
So on a scale of 1 to 10, as far as like a company that you'd be interested in buying, like I said, it's already dropped 30%.
Yep.
Yeah. Where would it be?
In the chip space, NVIDIA will be number 1 for sure. TSM 2, ASML probably will be 3. A lot volatile. So if you're putting a lot of money into it, you're going to have to stomach some of those drops. And like where you buy matters a hell of a lot. Even if I zoom out a little bit further, I mean, if you go to 612, I'll throw a bag at it. 612, but 672, I'm very interested in it, but it's third because of the volatility. They're like the Tesla of this space in terms of volatility, not management, but how the price action moves on it. The days when it's running up incredibly well, you're going to be very happy, but on the days where it's sliding down, you're going to hate it. Just inside of this quarter, we've gone from 11.10 down to 7.49. I don't care how much financial discipline you think you have. Let's say if you have $200,000 invested, it's hard to sit through a drawdown like that. $100 slide almost.
Yeah.
If this is an assembly line, like they're part of the assembly line. Like it's tough to produce at the levels you want if they're not a part of your assembly line, because, and even we'll take like other companies, they don't have the technology to make the nano wafer. So like the wafer, think of it as like a Eggo waffle, right? Like that's what this is. Like these large sheets that they put the semis on, they have the machines that actually make them. And so if you don't have the person that makes the sheet, then you don't have anywhere to put the chip on. And so it's an assembly, like the ecosystem. It's definitely in my top 5. I definitely have it.
Absolutely.
It's in my portfolio now. Just full disclaimer, it's in my portfolio. But yeah, it's definitely in top 5. It's part of the assembly.
Well, and going even to the election night recap episode, for those who like, you guys should stick to what you know. Presidents and the cabinet will decide policy, which then affects the market. But think of it like this. ASML dropped almost 400 points to show you how big the geopolitical tensions are. Their profit margins is 29%. So if your profit margin is 29% and you're pretty much the manufacturer for the entire space that matters the most, what is going on politically worldwide that is not being revealed yet? They keep lying about these jobs numbers. So we'll see. Amazing company though.
Yeah. Yep. Intel, TSM. Oh, well, next up, we're going to talk about Apple. They
did. I'm joking.
Nah, don't do that. Don't do that.
We gonna talk now, though. Oh boy,
don't do that, man.
They previewed the Apple 16. Right?
Yeah, iPhone 16. Yeah, they announced it.
iPhone 16.
Yep.
Which I believe is fully powered by AI technology.
Apple Intelligence. Yep.
I think they made some updates to the Apple Watch and a few other things. They've been doing this periodically for the last years. Has this? Well, they have a hearing aid, I believe.
Yeah, they said they turned the AirPod 2 into it has hearing aid capabilities.
Yeah, the AirPod's really annoying. That noise thing is like when you speak, the music goes down.
You don't like
you can turn it off, but it is annoying.
I tried to, but I couldn't turn it off.
You can change the value. On your phone, you can do it.
I tried to.
I love the earbuds. The Maxes I have as well. My kids stole them from me. I haven't seen them in months. But those are great. But that's interesting. You have the device, and now that's going to help the hearing impaired, which is crazy. The Apple Watch update, they changed the design. It has a polished titanium option and a new S10 chip. How often do people wear Apple Watch? Are people wearing the Apple Watch every day? I have Apple.
When?
I use it, but I'm just wondering, like, if you have the Apple Watch 7, do you now need the Apple Watch 10? It's becoming one of those things, like, the product is so good, do I need to update? Right? Kind of like how we said with the phone for the past maybe 4 iterations. The product is so good, do I really need a new watch? Or do I need a new phone?
I'm going to be on bullshit. So, listen, for far as the watch, I love the watch. You got to get your rings knocked out. We'll talk about them blackout, the other rings you got to take care of. But I'm going to be real. When y'all update the AirPod Pros, you scan our brain, why don't y'all listen to what consumers want? Get y'all ass in Midjourney and create a new phone. Like, I'm disappointed. Yes, the phone, I have a 15, I have a 14, I have a Pro Max, I have the earbuds, and you may take all my IP. HQ, I love y'all. Tim Cook, I love y'all. When are y'all going to stop re-rocking the same fucking phone up? I don't want to hear that it's going to, yes, it's doom on me. I don't want to hear the 17th is going to be the most innovative version and most contextual listening experience. Make a new phone. God damn. So 2034 can't come here fast enough. So I don't know what y'all need to do. I love y'all. I've been supporting y'all since y'all had the orange backs on the big fucking desktop. Fix this. It's been 12 years. Since iPhone 7 has been the same thing. I don't need a new camera. I can go to Blackmagic or Sony. Or, bro, do something. For the first time in history, it's becoming like more sexier to have an Android than an iPhone. Fix something. Y'all, I can't flip my damn phone out like Drew can with the Samsung Galaxy Baller Edition phone. Give me some innovation, man. iOS is amazing. Still love the company. Love the stock. But going back to the over-delivering, if you want exceptional returns in the market, you have to give an exceptional product. I think Apple is playing it too safe. You need some more visionaries back in the bed, and there are some there. You need to empower them. Tim Cook's still an amazing CEO. We have to tell the truth. When's the last time, I'm back to your test, you've heard someone say, man, I can't wait to get the new iPhone. Huawei is an indicator. Look how many units they shipped out.
2.7 million.
Is it time to abandon ship?
Whoa. On Apple?
Yeah.
Not yet, but I'm not going to lie to you. I'm going to give them another year, and I may take them out of my 2 Tech 2 index portfolio.
Wow. That's heavy. One more year.
Show me something. Listen, hop your ass in Mid-Journey. Give me this is how bad it's gotten if you're an Apple fanboy. When would even get no leaks of what a new phone could be no more? We got a new leak over what Siri could be before.
All right, so what can they do? Outside of having a hologram thing what can they do? They're known for phones, right? That's what they're known for.
Yep.
So do they just create a whole different product? They tried that. That hasn't really worked. Do they go into different industries? They tried that. Healthcare, cars, that hasn't worked.
They'll still do well in healthcare, but they need to push
healthcare. Yeah, that's still cars.
Yeah, that's on the table. They
still taking that data
right now.
Yeah, they checking my heart rate every 30 seconds.
On the phone side, they need to bring. I've been saying it forever. You need to bring back. It wouldn't be a bad idea to bring in Kanye or somebody who is a real creator to make something new.
Kanye West.
That STEM shit was a good idea. Just didn't execute it right. Like here's the thing about any brand. Every brand goes through a cycle when they're incredibly innovative for 10 to 15 years. They have success, and then they rest on their laurels, and they start to dial it in and try and perfect what is working, opposed to creating something new that's more magical. Even for me, great. Stock Club worked, great. But then I began to add more companies and more prices to continue to give it an edge. I think the last time that I was excited about buying an iPhone probably was the 12 or the 13. We're now on 16. But if you look at the 7, there isn't much difference in those two. Of course, the hardware is better, but it does not stand out as a differentiated model, while other companies, Huawei, Samsung, are innovating. Like, you're either going to have to acquire a division, or you're going to have to make a whole new team full of creatives. Because if this is the lead gen into your ecosystem, if this goes away in value, the entire company starts to slowly erode. I don't worry, for those of you going to comment online, I don't worry about losing when I'm down 20. I get scared when the lead goes away and I'm only up 10. They don't have a competitive advantage right now.
What about the down 28 at halftime?
No, they're not there yet.
Shout out to Colorado. You're struggling.
Tough. There's some real concerns there. But we started the year about real concerns with Apple. We started the year, but this is their month, right? Fourth quarter is their quarter, and we still have the same concerns. The innovation is inside of the phone, right? Whereas most people just want to see something new. So when you
show me that in iOS, I can tell Siri, hey, map out my whole month, and if that can integrate, I didn't see that.
Let's see it. I think we had this conversation when we were talking about health, and somebody was like, well, it's 40% less sodium in those chips. Yeah, well, we didn't know what it was before. How do we even quantify that? How do we know, right? So when you tell me that it moves at 10% faster than the 17 or the 15, the average person is not like, oh, you know what? Let me time this. Yeah, this is moving faster. So yes, will the GPUs be better? Great. The average person is not going to. They don't, right? Will they have storage? Are the cameras? The average person wants to see new design. They want to see that this is different than the product that I got. Here's how it does play back to the conversation we were talking about with ASML, and we were talking about NVIDIA and TSM. So the new A18 chip is created specifically for the 16, so it's going to optimize running large models for generative AI, right? So, but that technology needs to be done on a 3 nanometer technology. So when we're talking about the nanometer process, right, this is for back to the ASML comp.
Yeah.
Intel, a company that I know you love to talk about, are still creating nanometers at a 10 nanometer technology, right? And so you're talking about Apple that's now putting out their new phones down to a 3. TSM was using a 5. NVIDIA's using 5. They'll probably get down to 3 at some point. That shows you the difference. And who's making the wafer for those to produce on, that's where ASML comes into play. But yeah, man, if you can't see it, if I can't see the innovation, I don't know if the pre-order process becomes exciting anymore. Like you said, nobody's saying like, hey, where are the commercials? Get your new iPhone. I haven't seen it yet. When we heard the Huawei news and we heard that they were going to put it the day before, we were like, they're trying to step on this announcement. Not only did they step on it, but they showed the numbers. Apple's not going to do that. They got almost 3 million pre-orders for their phone.
Insane. And at a time, 10 years ago, Apple was like Kendrick Lamar, shout to Rock Nation. No one would even think about challenging Apple in this way 10 years ago. Now Huawei doesn't even give a damn. Like, to Apple HQ, I love y'all dearly. But man, there hasn't been excitement around the product. And are there gradual improvements? Yes. But if I don't see a exponential increase in productivity from the phone, hell, iMessage still looks terrible in comparison to Instagram's or Telegram's messaging platform.
Yeah, and I don't want the part of the announcement as a new color as one of the line items. I don't care. Who cares about the phone color, bro? You're going to put a case on it anyway.
Okay.
Sorry.
We'll see. We'll see. I want to do some impromptu because I definitely want to add as much value to Market Monday's audience as possible because you guys are been extremely loyal. So somebody had asked, I read comments a lot, and somebody had asked some questions about retirement planning. So it's end of the year, so I think it might be a good time to kind of go over that. Yeah, maybe we can go over the 12 different type of retirement plans for individuals and business owners quickly. So 401k plan is something that everybody probably is familiar with. That is for-profit businesses. You can actually contribute up to $23,000 a year if you are an employee, an additional $7,500 if you are over 50. So that's $30,500. So benefit with the 401k, you put money in, it lowers your taxable income, save money on taxes. You take it out when you're 59 and a half without avoiding a penalty. If you work in a school or a hospital, you might have what's called a 403B plan. Same type deal. Same rules apply, but that is for the nonprofit world, but it still allows you to actually put money in. And then with these 401k plans and the 403B sometimes, well, they give you a Roth option. We'll talk about that later. But 457 plan is for government employees. So they're all in the fours. I don't know why the IRS coded it like that, but the 401k for profit, 403B for nonprofit, 457 for government entities. And then the IRA is for individual people that want to put money away. If you have a business or if you don't have a 401k, you can open up an IRA. Anybody can open up an IRA. You can do it yourself. You can work with a financial advisor. You could put up to $7,000 in that, an additional $1,000 to bring it to $8,000 if you're over 50. And then you have a Roth IRA option also, which the Roth, you don't pay taxes when you take the money out, but you don't get a tax deduction when you put the money in. Now, for business owners, this is where it gets a little bit more complicated. Simple IRA allows you to put $16,000 in and an additional $3,500 if you're over 50, but the employer must match an employee contribution dollar for dollar up to 3%. So as a business owner, your number one thing as a business owner is how to save money, right? And one of the best ways to save money is to implement a retirement plan. And you kind of kill two birds with one stone because you're lowering your tax liability, but you're also putting yourself in a position to actually have more money down the line, right? So it's like you can just buy a computer and that's a tax deduction, but you're not really getting that money back, right? Yeah. It's something that is beneficial for you. But when you put money into a retirement plan, that's like you're saving money as far as it's lowering it. And that's how, when they say you're saving money, that's what that means, right? It's lowering your tax liability. But you're also going to be getting that money back because it's money that's invested. So it's not like you just bought something. You're investing the money as well, right? Solo 401k is like a 401k, but it's for an entrepreneur. So it's just one person, right? And then you have a pension plan, defined benefit. That's a little bit more complicated. Mike, you can split the screen. And that allows you can actually put up to $270,000 in a pension plan. So that's obviously a lot more than a regular retirement account, right? And that's one of the benefits. Like I always say, the tax code was not made for employees. It was made for entrepreneurs and investors, right? So you see, okay, now as an employee, the most you could put in is $23,000 with the 401k, but if you're a business owner, you can put, depending on how your business is set up, you can put up $270,000 away. That, what, 10 times? That's like
yeah,
10 times difference. Profit sharing plan, you could put up to $66,000 into that. Cash balance plan, that's a little bit more complicated. There's not really a set amount. That depends on how much money your business is actually bringing. Then you have the thrift savings plan, which a lot of teachers have that also, better known as a TSP. And that's kind of like the 401k where you could put up to $23,000 a year as well. So please consult with a tax advisor, CPA, to know your options. But a lot of times you're leaving money on the table, especially if you're a business owner, because you're ecosystem. We haven't really talked about them a lot on this program, but they do hold damn near monopoly on the EUV technology, and a lot of companies actually get their tech through. They're like one of these companies that's like a gateway company. And during the pandemic, they ran up crazy during the pandemic, but they're down 30% from a high of 1,100 to around 750. So we talked about.
Yo, happy Monday, y'all.
Welcome back to Market Monday, ladies and gentlemen. September, much to talk about.
9th.
For sure.
Yeah.
So much to talk about, man. Yeah, this is going to be a very informative episode.
Yeah.
Ian, you back home?
I am. I may be having to leave if a hurricane come.
Oh, yeah.
There's some talks?
Yep. I'm finna season.
Yeah. Time.
I go. Sorry.
There you go. All right, I'm gonna keep it short. Shout out to everybody that took advantage of that stock club sale.
Yeah.
Everybody should be entered, and I think you dropped some prices over the weekend, right?
Yeah, 94 prices. So go set your alert. The NVIDIA low at the bow price. It's gonna be spicy at that election debate. NVIDIA, join.
Speaking of the election debate, we're going to do something special tomorrow.
Breaking news alert.
We're not going to drop an EYL episode because it's a very important day in history of America with the election debate. So we're going to do a debate review. 10:30 Eastern Standard Time. We are going to live stream. Maybe we'll have some of our political friends join us, and we will dissect what the politicians said, what it means for you, the economic implications. Should be good. Spirited conversation. It's the first time that we've done this, but I think it's important, leading into this presidential cycle. This might be the only debate that they have, they said. Mm-hmm. So 10:30 Eastern Standard Time, set your alarm. 10:30 p.m. Eastern Standard Time, we are going to do a post debate. And if the debate runs a little bit longer, we'll gauge it. We'll push it back a couple of minutes, but we'll do right after the debate ends. Join us here, and we will be dissecting most important topics from the debate. I'm interested to watch the debate myself. So yeah, that's going to be tomorrow at 10:30 Eastern Standard Time, and then of course Blackout back this week. A shout out to Ian, Master Investor. Always
shout out to you. You did.
Yeah, I did.
My boy got the best ad lib since that Jeezy. Yeah. Ooh.
Oh, and on Blackout, we will be covering the Lil Wayne controversy, Super Bowl, Kendrick Lamar, Jay-Z. We will be covering that in detail because that needs about 15 minutes. So we're going to be covering that in detail on Blackout if you're interested in hearing our take on that, because there's some business lessons.
There's a bunch of business lessons in that.
There's some personal lessons.
No, there's some.
Drake called my phone.
Yo, Six. Everybody in Six. Shout out to my brothers. Shout out to my brothers, and shout out first. Obviously I'll cover, but congrats to Kendrick, man. Hell of a year. Well deserved.
No round twos. My boy.
Salute. Just salute God.
It's us. And like Charlamagne said, man, every year we're highlighting our talent. So I from that standpoint, I can appreciate
salute
that.
To Die. Eat that wrong. They did that wrong for leaving Weezy off that bill, though. But we're going to talk about that. We're going to
talk about it.
That's what's behind me. That's easy. I might have to call him. I'm calling him.
Shout out to Weezy.
I'm going to do one of those.
Bring that boy on stage, though.
Salute to Ho, first and foremost.
When you're in position of power, you can make the moves. Throw it up one more time. We're just going to freeze frame it.
40-40. Shout out to the 40-40.
Yeah. Shout out to the whole team.
Shout out to the whole nation.
Rock Nation.
Rock La Familia. We're going to go back. Everything Hobo. Shout out.
Rock Distribution. Shout out to everybody.
Yeah, that's a fact. Ian, any announcements on your side?
If you want to get rich, go to eatinvest.com. Thank you to everyone who joined. Prices are in. For those of you who may have bought before, if you lost access somehow, you'll be re-uploaded so you have access tonight. But if I made you money, please put yes in chat. Once again, thank you to all of you who have joined. set your alerts, and then our actual call will be this Wednesday at 9 p.m. Central. So it's a lot of conversations to be had. So we're going to do a quick one on Wednesday, then watch Blackout. And if I made you money, please put yes in chat.
Amen.
Stay on the right side of history, too. I'll say that lesson one from the whole Kendrick Fiat. Stay on the right side of history.
That's a fact. Any disclaimer?
On the right side of history. That's great. Y'all know how this works, man. This is our disclaimer. Please continue to do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you hear on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Continue to do the research, continue to share the research, and when it's great and you make some money from it, spread love. Give some credit to the people you found it from. Continue to share it.
For sure. Subscribe to we have a Clips channel called Earn Your Leisure Clips. So going forward, all of the small segments, 5 minutes, 10 minutes, that's going to be on that channel. So subscribe to Earn Your Leisure Clips if you're interested in the micro content on YouTube.
Another great business lesson. The best advisors are people who are not fans of the brand. Thank you. Por favor.
Appreciate you. All right. So a lot to talk about. But first, let's go a little off script. ASML is a company that's very important in the chip ecosystem. We haven't really talked about them a lot on this program, but they do hold damn near monopoly on the EUV technology, and a lot of companies actually get their tech through. They're like one of these companies that's like a gateway company. And during the pandemic, they ran up crazy during the pandemic. But they're down 30% from a high of 1,100 to around 750. So we've talked about NVIDIA. We talked about NVIDIA a lot. We talked about TSM. But ASML is another one of these chip-making equipment companies that's vitally important to the ecosystem. Like I said, they almost have a monopoly in their niche. Yeah. Mm-hmm. So, what is the prognosis for ASML?
No one wants to say it, but we are in a chip recession. So everything is coming down. NVIDIA, once it didn't over-deliver on Blackwell, which I think they will next year, it brought the entire space down. I can see ASML going to 672.72.
Oh, what'd you say?
ASML. 672? Yeah.
Okay.
Very probable. So that would be one area I would look to load the boat. If you were at InvestFest, tons of value. I gave you 8 levels where to get in on stage live, and a ninth one as a bonus. Shout out to you who asked, well, what's another level? You can plot how to map out your own levels there, or you can go to eatinvest.com, get the replay, or go to investfest.com and get the replay and see how to map these levels out for yourself. But we are in a chip recession. If we look back even 2 years ago, they were at 388. To go from 388 to then 1,100, in order to have exponential returns, you have to continue to deliver an exponential product, which they have done. But once you miss one revenue beat one time, we're going to have a pullback. So I think we're just correcting to the levels that it should be. But do they have a legal monopoly? Absolutely. It's one of the ones that we haven't talked about on here a lot. Absolutely, but I've talked about it endlessly in Stock Club. So 672.72 is where I will look to build a position if you're new into it. And let's be honest, like a stock can't run from 200 to 1,200 and then continue to go to 2,400. Like you're outside of mathematical probabilities and mathematical laws. Like if a stock goes up 500%, another thing I talked about on stage, knowing where to take profit. If you hit 5x, take some profit, take 50% off the table, let the rest run, add to back to the position, and you'll be A-okay.
Yeah, ASML is something, we spoke about, and I'm glad you said you spoke about it in Red Panda. We definitely spoke about it in our calls in EYLU. Yeah, but you know what? We spoke about it here first on Market Mondays, and now I'm glad that we're bringing it up again because it's important so people can understand how this works. Yes, NVIDIA has chips. Yes, Taiwan Semiconductor is the one that produces it, but there's a machine that creates those chips. And so ASML, in a sense, when you say monopoly, it's because they have the technology right now that can create the nanometer chips for TSM to now provide NVIDIA. And so they're not American. And when we're talking about imports and exports, these things come into play. And so if it's a Dutch company, and so if you figure if it has to ship to China, if it has to ship to America, and there's geopolitical tensions, they're going to be affected directly. On top of this, a company like ARM comes into the space, and now we're looking at this as, hey, maybe they're not the only player inside of the space. But is it when you see, obviously, companies pull back, and it's one of these cases where we watched NVIDIA get pulled back two weeks ago, and it was like, well, why really? The guidance is there. They're telling you guys to turn them out. We just saw a Broadcom report last week, and I put some numbers in on Broadcom, and we watched them pull back, and the guidance is there, and the revenue is there. So what? We talked about it. September is a volatile month. It's a rough month. Over the past 10 years, out of all the months in a calendar year, September has been the most volatile and has produced a negative 2.3% return over the past 10 years. And so we're in September. We talked about quadruple wishing. We talked about rate cuts last week with all that happening. You're seeing semis which have led for the past 12 months. They're slightly pulling back. Does this mean that they're going anywhere? Absolutely not. Does this mean you shouldn't invest? Absolutely not. But you got to pick your points. And we're getting to some of those levels where it's like, all right, this is a good position. I'm glad you said the number 672. Good number to be in it. But if you're looking at it long term, the dollar cost averaging anyway. And so it's one of those companies that we put it on our watch list. I feel like we did this in maybe June of 2020. So a lot of people maybe have had that run up and celebrated from that run up. But yeah, I think it's something you still stay in. It's a company that is definitely going to be a part of the ecosystem when it comes to AI, and definitely when it comes to making chips.
Continue to hold for the long term. Stop buying things when they're at a hype or high, and you'll be okay. Like, you can't, no company will defy mathematical averages. You can't go up 14x in a 4-year period or 11x and then not have a retracement. These are the areas in which you should be looking to buy. If you are not disciplined, you're going to die. But if you are disciplined, you'll profit. I think it's that simple. But yeah, I think they have a monopoly because they are really the supplier to the rest of the chip space. And the Dutch, they know a lot about that import-export business, don't they?
So they would. So
that's crazy.
So on a scale of 1 to 10, as far as like a company that you would be interested in buying, like I said, it's already dropped 30%.
Yeah.
Where would it be?
In the chip space, NVIDIA will be number 1 for sure. TSM 2, ASML probably will be 3. A lot volatile. So if you're putting a lot of money into it, you're going to have to stomach some of those drops. And like where you buy matters a hell of a lot. Even if I zoom out a little bit further, I mean, if you go to 612, I'll throw a bag at it. 612, but 672, I'm very interested in it, but it's third because of the volatility. They're like the Tesla of this space in terms of volatility, not management, but how the price action moves on it. The days when it's running up incredibly well, you're going to be very happy, but on the days where it's sliding down, you're going to hate it. Just inside of this quarter, we've gone from 1110 down to 749. I don't care how much financial discipline you think you have. Let's say if you have $200,000 invested, it's hard to sit through a drawdown like that. $100 wide almost.
Yeah.
If this is an assembly line, like they're part of the assembly line. It's tough to produce at the levels you want if they're not a part of your assembly line, because, and even we'll take like other companies, they don't have the technology to make the nano wafer. So like the wafer, think of it as like a Eggo waffle, right? Like that's what this is. Like these large sheets that they put the semis on, they have the machines that actually make them. And so if you don't have the person that makes the sheet, then you don't have anywhere to put the chip on. So it's an assembly, like the ecosystem. I probably have, it's definitely in my top 5. I definitely have it.
Absolutely.
It's in my portfolio now. Just full disclaimer, it's in my portfolio. But yeah, it's definitely in top 5. It's part of the assembly.
Well, and going even to the election night recap episode, for those who go like, you guys should stick to what you know. Presidents and the cabinet will decide policy, which then affects the market. But think of it like this. ASML dropped almost 400 points to show you how big the geopolitical tensions are. Their profit margins is 29%. So if your profit margin is 29% and you're pretty much the manufacturer for the entire space that matters the most, what is going on politically worldwide that is not being revealed yet? They keep lying about these jobs numbers. So we'll see. Amazing company, though.
Yeah. Yep. Intel, TSM, Samsung, they all buy
appliance, right?
Their products from them.
Mm-hmm.
So, well, next up, we're going to talk about Apple. They
did. I'm joking.
Nah, don't do that. Don't do that.
We're going to talk now, though. Oh, boy.
Yeah, don't do that, dude.
They previewed their the Apple 16. Right?
Yeah, iPhone 16. Yeah, they announced it.
iPhone 16. Yep. Which I believe is fully powered by AI technology.
Apple Intelligence. Yep.
I think they made some updates to the Apple Watch and a few other things. They've been doing this periodically for the last years. Has this... Well, they have a hearing aid, I believe.
Yeah, they said they turned the AirPod 2 into it has hearing aid capabilities.
Yeah, the AirPod's really annoying. That noise thing is like when you speak, the music goes down.
You don't like
it? You can turn it off, but it is annoying.
I tried to, but I couldn't turn it off.
You can change the value. On your phone, you can do it.
I tried to.
I love the earbuds. The Maxes I have as well. My kids stole them from me. I haven't seen them in months. But those are great. But that's interesting. You have the device, and now that's going to help the hearing impaired, which is crazy. The Apple Watch update, they changed the design. It has a polished titanium option and a new S10 chip. How often do people wear Apple Watch? Are people wearing the Apple Watch every day? I have an Apple Watch. I use it, but I'm just wondering, like, if you have the Apple Watch 7, do you now need the Apple Watch 10? It's becoming one of those things, like the product is so good, do I need to update? Right? Kind of like how we said with the phone for the past maybe 4 iterations. The product is so good, do I really need a new watch? Or do I need a new phone?
I'm going to be on bullshit. So, listen, for far as the watch, I love the watch. You got to get your rings knocked out. We'll talk about them blackout, the other rings you got to take care of. But I'm going to be real. When y'all update the AirPod Pros, you scan our brain, why don't y'all listen to what consumers want? Get y'all ass in Midjourney and create a new phone. Like, I'm disappointed. Yes, the phone, I have a 15, I have a 14, I have a Pro Max, I have the earbuds, and you may take all my IP. HQ, I love y'all. Tim Cook, I love y'all. When are y'all going to stop re-rocking the same fucking phone up? I don't want to hear that it's going to, yes, it's doom on me. I don't want to hear the 17th is going to be the most innovative version and most contextual listening experience. Make a new phone. God damn. So 2034 can't come here fast enough. So I don't know what y'all need to do. I love y'all. I've been supporting y'all since y'all had the orange backs on the big fucking desktop. Fix this. It's been 12 years since iPhone 7 has been the same thing. I don't need a new camera. I can go to Blackmagic or Sony. Or, bro, do something. For the first time in history, it's becoming like more sexier to have an Android than an iPhone. Fix something. Y'all, I can flip my damn phone out like Drew can with the Samsung Galaxy Baller Edition phone. Give me some innovation, man. iOS is amazing. Still love the company. Love the stock. But going back to the over-delivering, if you want exceptional returns in the market, you have to give an exceptional product. I think Apple is playing it too safe. You need some more visionaries back in the, and there are some there. You need to empower them. Tim Cook's still an amazing CEO. We have to tell the truth. When's the last time, I'm back to your test, you've heard someone say, man, I can't wait to get the new iPhone. So, Huawei is an indicator. Look how many units they shipped out.
2.7 million. Is it time to abandon ship?
Whoa. On Apple?
Yeah.
Not yet, but I'm not going to lie to you. I'm going to give them another year, and I may take them out of my Tech 2 index portfolio.
Wow. That's heavy. One more year.
Listen, hop your ass in Mid-Journey. Give me this is how bad it's gotten if you're an Apple fanboy. We don't even get no leaks of what a new phone could be no more. We got a new leak over what Siri could be before.
All right, so what can they do? Outside of having a hologram thing that probably, what can they do? They're known for phones, right? That's what they're known for.
Yep.
So do they just create a whole different product? They tried that. That hasn't really worked. Do they go into different industries? They tried that. Healthcare, cars, that hasn't worked.
They'll still do well in healthcare, but they need to push
healthcare. Yeah, that's still cars.
Yeah, that's on the table. They
still taking that
right now.
Yeah, they checking my heart rate every 30 seconds.
On the phone side, they need to bring. I've been saying it forever. You need to bring back a Johnny Ive or someone like that. I'm not even gonna lie. Like when they announced this phone, I know they won't do it. It wouldn't be a bad idea to bring in Kanye or somebody who is a real creator to make something new.
Kanye West.
That STEM shit was a good idea. Just didn't execute it right. Like here's the thing about any brand. Every brand goes through a cycle when they're incredibly innovative for 10 to 15 years. They have success, and then they rest on their laurels, and they start to dial it in and try and perfect what is working opposed to creating something new that's more magical. Even for me, great. Stock Club worked, great. But then I began to add more companies and more prices to continue to give it an edge. I think the last time that I was excited about buying an iPhone probably was the 12 or the 13. We're now on 16. But if you look at the 7, there isn't much difference in those two. Of course, the hardware is better, but it does not stand out as a differentiated model while other companies, Huawei, Samsung are innovating. Like you're either going to have to acquire a division or you're going to have to make a whole new team full of creatives, because if this is the lead gen into your ecosystem, if this goes away in value, the entire company starts to slowly erode. I don't worry, for those of you going to comment online, I don't worry about losing when I'm down 20. I get scared when the lead goes away and I'm only up 10. They don't have a competitive advantage right now.
What about down 28 at halftime?
No, they're not there yet.
Shout out to Colorado. You're struggling.
Tough. There's some real concerns there. But we started the year about real concerns with Apple.
Yep.
We started the year, but this is their month, right? Fourth quarter is their quarter, and we still have the same concerns. The innovation is inside of the phone, right? Whereas most people just want to see something new. So when you
show me that in iOS, I think I can tell Siri, hey, map out my whole month, and if that can integrate, I didn't see that.
Let's see it. I think we had this conversation when we were talking about health, and somebody was like, well, it's 40% less sodium in those chips. Yeah, well, we didn't know what it was for. How do we even quantify that? How do we know, right? So when you tell me that it moves at 10% faster than the 17 or the 15, the average person is not like, oh, you know what? Let me time this. Yeah, this is moving faster. So yes, will the GPUs be better? Great. The average person is not going to. They don't, right? Will they have storage? Are the cameras? The average person wants to see new design. They want to see that this is different than the product that I got. Here's how it does play back to the conversation we were talking about with ASML, and we were talking about NVIDIA and TSM. So the new A18 chip is created specifically for the 16, so it's going to optimize running large models for generative AI, right? But that technology needs to be done on a 3 nanometer technology. So when we were talking about the nanometer process, right, this is for back to the ASML comp.
Yeah.
Intel, a company that I know you love to talk about, is still creating nanometers at a 10 nanometer technology, right? And so you're talking about Apple that's now putting out their new phones down to a 3. TSM was using a 5. NVIDIA's using 5. They'll probably get down to 3 at some point. That shows you the difference and who's making the wafer for those to produce on. That's where ASML comes into play. But yeah, man, if you can't see it, if I can't see the innovation, I don't know if the pre-order process becomes exciting anymore. Like you said, nobody's saying like, "Hey, where are the commercials? Get your new iPhone." I haven't seen it yet. When we heard the Huawei news and we heard that they were going to put it the day before, we were like, they're trying to step on this announcement. Not only did they step on it, but they showed the numbers. Apple's not going to do that. They got almost 3 million pre-orders for their phone.
Insane. And at a time, 10 years ago, Apple was like Kendrick Lamar, shout to Rock Nation. No one would even think about challenging Apple in this way 10 years ago. Now Huawei doesn't even give a damn. Like, Apple HQ, I love y'all dearly. But man, there hasn't been excitement around the product. And are there gradual improvements? Yes. But if I don't see a exponential increase in productivity from the phone, hell, HiveMessage still looks terrible in comparison to Instagram's or Telegram's messaging platform.
Yeah, and I don't want the part of the announcement as a new color as one of the line items. I don't care. Who cares about the phone color, bro? You're going to put a case on it anyway.
Okay.
Sorry.
We'll see. We'll see. I want to do some impromptu because I definitely want to add as much value to Market Monday's audience as possible because you guys are been extremely loyal. So somebody had asked, I read comments a lot, and somebody had asked some questions about retirement planning. So it's end of the year, so I think it might be a good time to kind of go over that. Yeah, maybe we can go over the 12 different type of retirement plans for individuals and business owners quickly. So 401k plan is something that everybody probably is familiar with. That is for-profit businesses. You can actually contribute up to $23,000 a year if you are an employee, an additional $7,500 if you are over 50. So that's $30,500. So benefit with the 401k, you put money in, it lowers your taxable income, save money on taxes. You take it out when you're 59 and a half without avoiding a penalty. If you work in a school or a hospital, you might have what's called a 403B plan. Same type deal. Same rules apply, but that is for the nonprofit world, but it still allows you to actually put money in. And then with these 401k plans and the 403B sometimes as well, they give you a Roth option. We'll talk about that later. But 457 plan is for government employees. So they're all in the force. I don't know why the IRS coded it like that, but the 401k for for-profit, 403B for nonprofit, 457 for government entities. And then the IRA is for individual people that want to put money away. If you have a business or if you don't have a 401k, you can open up an IRA. Anybody can open up an IRA. You can do it yourself. You can work with a financial advisor. You could put up to $7,000 in that, an additional $1,000 to bring it to $8,000 if you're over 50. And then you have a Roth IRA option also, which the Roth, you don't pay taxes when you take the money out, but you don't get a tax deduction when you put the money in. Now, for business owners, this is where it gets a little bit more complicated. Simple IRA allows you to put $16,000 in, and an additional $3,500 if you're over 50, but the employer must match an employee contribution dollar for dollar up to 3%. So as a business owner, your number one thing as a business owner is how to save money, right? And one of the best ways to save money is to implement a retirement plan. And you kind of kill two birds with one stone because you're lowering your tax liability, but you're also putting yourself in a position to actually have more money down the line, right? So it's like you can just buy a computer and that's a tax deduction, but you're not really getting that money back, right? Yeah. Something that is beneficial for you. But when you put money into a retirement plan, that's like you're saving money as far as it's lowering it. And that's how, when they say you're saving money, that's what that means, right? It's lowering your tax liability. But you're also going to be getting that money back because it's money that's invested. So it's not like you just bought something. You're investing the money as well, right? Solo 401k is like a 401k, but it's for an entrepreneur. So it's just one person, right? And then you have a pension plan, defined benefit. That's a little bit more complicated. Mike, you can split the screen. And that allows you can actually put up to $270,000 in the pension plan. So that's obviously a lot more than a regular retirement account, right? And that's one of the benefits, like I always say, the tax code was not made for employees. It was made for entrepreneurs and investors, right? So you see, okay, now as an employee, the most you could put in is $23,000 with the 401k, but if you're a business owner, you can put, depending on how your business is set up, you can put up $270,000 away. That, 10 times? That's like 10 times difference. Profit sharing plan, you could put up to $66,000 into that. Cash balance plan, that's a little bit more complicated. There's not really a set amount. That depends on how much money your business is actually bringing in. Then you have the thrift savings plan, which a lot of teachers have that also, better known as a TSP. And that's kind of like the 401k where you could put up to $23,000 a year as well. So please consult with a tax advisor, CPA, to know your options. But a lot of times you're leaving money on the table, especially if you're a business owner, because you might not even be aware that you can do a pension plan. Right. And you think that, okay, the most I can put in is to a 401k, but you can do a 401k and you can do a pension plan. So you might be putting away $23,000 and you think, okay, that's great. But you still might be paying $300,000 in taxes. Well, if you put away another $100,000 into a retirement plan, now that might cut your tax liability by $80,000. That makes a real difference, right? And for the regular employee, you might be funding your 401k at minimal levels, right? This is a way to actually, put more money into it. So, vitally important when you talk about investing, because we talk about retail investing on the brokerage side most of the time, but there are other ways to invest. And you can invest that money, and most of the time it's different funds. Sometimes they let you invest in individual stocks, but most of the time it's like different funds, index funds, ETF, stuff like that. But it's important because, like I said, that makes a real difference as far as paying $150,000 in taxes as opposed to paying $50,000 in taxes, right? That $100,000, not only are you saving $100,000, but the opportunity cost, that $100,000 could potentially grow into $1 million. So you actually lost $1 million by not taking advantage of something that is here, is designed for you. But like I said, it's kind of complicated. You got like 12 different options, right? So if you're not educated and your CPA is not educated, then you might not even be fully taking advantage of ways to max out your retirement to save money on your taxes.
It's a great list of value from the highest level and from a celebrity.
Why not?
We're doing for celebrities.
Man.
12 ways. Hype them up.
Sounds like you do this for a living.
Yeah, that was a great list. I mean, and the way inflation is going, I know that the axiom used to be, hey, build a business. That's the best way to wealth. But it's like you have to invest the money inside of the business to help grow. Because the way inflation is going, you don't know what the market is going to be like in 15 years. Like, imagine being an entrepreneur in 2008, 2009, 2010, and seeing these valuations of home prices go up and commercial buildings go up. Like, if you're not having that money work for you, Lord forbid if the business goes under, at least you'll still be making some money from the returns that you're getting out of one of these plans.
That's a fact.
That's a fact. I mean, obviously, I'm being facetious. You obviously did this for a living. I wonder now, like, as you were speaking, based on technology, based on the way the landscape is now, what are the biggest differences you see in financial planning, financial advising from the day you started to present day?
I'm not in this space anymore, so I'm not really sure as far as like the day to day, but I know technology has definitely changed everything. As far as when I came in, it was paperwork, like massive amounts of paper. And now a lot of that has been changed, and it's everything is online. It's even how they keep your records is online. And that's one of the things where I like the blockchain, like that's how I understood blockchain early, and I understood like how it was going. Everybody kept talking about blockchain as far as cryptocurrency, but blockchain, what it's going to do to once again, the healthcare industry is going to be phenomenal, because it's like, when we used to order medical records for somebody that wanted life insurance. So if you wanted life insurance, you have to fill the application, but then we have to, 9 times out of 10, we have to order your medical records, which we call the APS, attending physician statement. Now, this is us actually, the insurance company is reaching out to the hospital or the doctor saying, can you give us records, right? And then they give them the records, and then they have to review the records. I've seen it take up to 8 months because the secretary is just incompetent. They don't get back. And this is a physical process of they have to fax or email paperwork. But in the doctor's office, they have thousands of paper. Like this is something that I've seen with my own eyes. So I understand, like, all right, once this, and it's going to take a long time for it to get fully digitalized, but it's going to get digitalized at some point in time. So at some point in time, all of these medical records are going to be on the blockchain, and it's going to take a minute. It's going to say, okay, he had an EKG in February. I don't even got to call nobody. It's going to be all in the system, a database. The insurance company is going to have a system with all of the hospitals. They're going to put the code in, and they're going to send it, and then they're going to send it back. Little stuff like that saves so much money, becomes more efficient. It's everything. So it all ties in. So that's one of the things that I even knew back then, like, this is going to change everything once they really can get this done on a more efficient level as far as technology. Then, of course, robo-advisors. I don't think robo-advisors has taken off the way that people have planned.
They're planned, yeah.
But who knows? That might be something in the future as well, as far as, people fully relying on AI to be their financial advisor, as opposed to a person. Like I said, it's not there yet. You still need a human touch. But as they're getting better with artificial intelligence, that might be something to look out for sure.
Is that one of those career paths where we look at it, fast forward to the future, when we talk about AI and generative AI, are these some of those career paths that you could see being dented, replaced, right? Because the access to information is there even now. Like, a lot of people are getting access to the information. Technology is going to streamline it as well. How much of in the future you think the human touch is going to be needed in that space?
I think it's still needed, even if you look at taxes, right? I mean, theoretically, you could probably send all your information to AI right now, and AI could do your taxes. Me personally, I would still want this was this was that. So, but I do think that humans need to utilize AI. So if you're a CPA, if you're a financial advisor, you should be utilizing the technology as it's what everybody keeps saying. Like, a lot of the things is not necessarily going to totally replace somebody, but it will replace, like, if you have an assistant, that might not be needed. Right? But that's actually could be beneficial to you because you don't have to pay an assistant anymore. So,
thank the Lord.
I mean, from a financial standpoint, the health. So I feel like I don't feel like it's. I think it's cool, especially for wealthy people. I think the wealthy people, if you got, let's be honest, you got $100 million, you still go.
You're not hitting ChatGPT 5 to
I doubt
manage the family office. I'm sorry.
Even for like a lawyer, right? Like, yeah, if you got a public defender, you might just want to take your chances with a robot at that point. But if you got $100 million, you still might. Now, the lawyers need to be working with AI to make sure that they get all of the data collected. But I still think that personal insight is needed. But like I said, you should definitely be working with somebody because, I got audited before, and that's because years ago I tried to do my own taxes. This was like probably 17 years ago. I did TurboTax, so I learned the valuable lesson. Trying to save money, you end up, costing yourself more money. So I never used TurboTax ever again. Shout out to TurboTax. I had nothing against them, but you want to use a professional. That's my whole thing in life. Like, if I want to put a painting up, I'm not qualified to put a painting up, right? You might think you are until it's crooked. And then you drilled a hole in the wall. Now you got to drill another hole in the wall. And you think, what's the worst that can happen? It's just a painting until you tear your drywall. You tear your whole wall down.
Dirty drywall.
That's a fact.
Hit your plumbing.
That's a fact.
Change order.
I'm a big proponent in paying a professional for services. I have no problem with doing that. But yeah, shout out to everybody out there that's an entrepreneur. Make sure that, you're making the most of your situation, because the government's going to get their money, but there are ways to limit. There are ways to limit the amount of money that you're paying legally.
Keyword. Oh man, no.
As far as the AI debate too, I think it's going to be a battle between the subpar and supreme. Those who are supreme at doing their job, there'll always be space for you. But if you're subpar,
I
mean, even since Chat GPT came out, like I've talked about this before, man, like I've been able to replace at least 8 people. And then I don't have to hear the complaints about they were tired or they had too much Don Julio the night before. Great. Good old Chat GPT and Midjourney going to be right there.
Don Julio.
Snap them up. Thank you.
Don Julio.
This is a message brought to you by
education, vitally important. And that's the kind of stuff you're never gonna learn that in school. So that's, one of these things you gotta learn on your own, right? They're not gonna teach you retirement planning in school. So it's like, it's one thing to become a business owner. They're not gonna teach you that, but it's another thing that how do you maintain your wealth? How do you maintain it? How do you save it? How do you grow it?
The harder part.
And these are all things that you gotta, like even Shaq, I heard he was saying, like, I picked up a gym from him when he was like, I'm not just gonna pay my mom. I'll put her on payroll.
Yeah.
If I'm gonna give my mom money anyway, why not just give her a job, right? And there's plenty of jobs that you can give your mom. But so many people, like, we just see rappers, and it's not their fault, they're uneducated. Like, you ever see these videos where rappers give their mom like $50,000 in cash?
Yeah.
Or like $10,000 in cash for their birthday. Or even their girl, they do that all the time. I see like girls on Instagram, they get like money, like this amount of money in like a Birkin bag, and it's like, happy birthday, babe. I'm like, all right, if I'm gonna give you the money, if we're talking every day, why don't you be a consultant for me, right?
For real.
And why don't you be on payroll? And now you'll help me because the money that I'm paying you is tax deductible, but I'll also help you as well because, yeah, you do have to pay money on the taxes, but at least you can have some income that you can show when you need to buy a car, when you need to buy a home right now, as opposed to you just having no money to show at all. Now, at the very least, if we're in a relationship and I am going to give you money, well, why not? Let's do it that way, as opposed to it looks good on Instagram, but
that's the issue.
That 50,000 is not something I'm ever going to get back.
You just brought up a great point inside of, and I know that's something we had conversations about in the past where it was like, yeah, as an entrepreneur, I can write things off, but as you're doing that, you're also bringing down your income level, right? So if you wrote everything off and now you have 20,000 that you said that you made this year, well,
oh yeah,
you try to go buy that house.
Trying to go buy something.
You only made 20,000, right?
Yeah.
And so you gotta be mindful of these decisions that you make.
Fellas, if they ever hit you with it, but that doesn't feel like love, let her go.
But I heard them on Market Monday say you should put me on salary.
Girl. Bagging them bags was a part of that social media job.
Okay.
Your W9 this gamble, motherfucker. Come on.
That goes back to the education process, though. Like, you know what I'm saying? Like,
you got a vet.
We talk about women following men, right? Well, if you're not a leader, you can't be followed. So if you want to be followed and if you want to be a leader, it's up to you to be an educator as well, right? Like, let me sit down. I'm going to educate you. I'm going to educate you on why signing this W-9 is important.
And it's NDA. No, W-9 and NDA together?
W-9 NDA play.
I signed both.
Where we at? We at dinner as we're saying this? Like, or is this like...
big facts.
I love you card. Like,
espresso martini, baby. I want to make sure in the future that even if I'm not here, you're good.
The W-9. I'm joking, but it's real. It's real shit. I'm just saying, at what point, maybe this is like a black, but like at what point do we say like, yo, you know, I want to talk about this paperwork, right?
It's not paperwork. Like he said, like, I mean,
it is secure. It's financial security.
It is. You getting put on payroll. Who wouldn't want to be put on payroll?
Facts.
Half these dudes ain't even paying for their nails, but their girls' nails to get done.
Big facts.
That's tricky. Like for real.
That was jail looking crazy on their fingers, yo.
They just throwing a bread, right? Like you said, like I'm putting $50,000 in a bag, and it's like,
well, it's not tricking if you got it.
And half the time they taking the money back after the camera go off.
That's true too.
Yo, love. When you see that paper inside the card, don't ask no questions.
Yeah, just sign this.
Sign here.
Bring the food out for me. Bring the drinks.
What's that? The check? Nah. You see that sticker? It says sign here.
Real quick, baby.
The NDA play.
Both.
That's a seat on me, amor.
Both.
All right.
Both of them.
That's some free game for y'all. Y'all do what y'all want with it. S&P worst week since 2023.
That has happened.
Last week. That was last week.
Yes.
So,
and make her sign the NDA when the market slide for her security. Ooh. Send them little roses after.
Sure. The reality is this, right? Like we have now just made the conversation is easier because you could use this as a reference point. Whereas before, it's like, yo, where's this coming from? No, listen to what the guy said.
I mean, maybe if NVIDIA lost $275 billion in value, it's really important that we can't.
Nobody even, it was like a sneeze. The biggest loss in the history of any company in history. And it was like,
but as a woman, you want your man to boss you up, right? Like buying a bag, okay, what does that really mean?
What does that do?
Okay, let's get your LLC. Let's get you documented as a consultant, right? Now you have employment history. Use me as your resume.
Absolutely.
That's a real flex.
These are calculated stuff.
That's a real flex though, but that takes a real boss. That takes a boss.
Do that. And that's real care because you can get a Chanel or a Birkin.
No, you can't.
Get the in the summer anyway.
No, but you can't really. You can't. Like they can't do it. Like I mean, people.
Well, nobody can get a Birkin.
Like
Birkin bags are out of the reach.
I'm saying that you can't just do it. That's a different level. There's levels.
Go to Canal Street.
Nah. You still buying YSL bags at this level.
YSL, don't do that. YSL makes good bags.
I'm not knocking them. No. Like the Louis Vuittons and like that.
Louis Vuittons.
They're good bags. I'm saying that level. That's a different level.
Nothing wrong with that.
You got to act your level.
Coach.
Nah, we're not doing that.
Listen, I'm like,
that's crazy.
You going to the coaches to go to? No.
Michael Kors.
Wrong weight class.
I'm leaving.
You skip.
I can't do it.
You bought somebody Michael Kors?
I've
never once.
Listen, no, never.
Dooney and Bert.
What we do? You can't go from A to Z. You got to appreciate every single level. Every single level you got to appreciate. So at some point in time, you had to get a Michael Kors back.
Never.
At some point.
Never.
14 years old.
I mean, the other side of it is if you don't, they end up getting entitled.
I wouldn't want to have a girl.
Get back to that gym shark bag.
I wouldn't want to be walking with her when she had that.
I'm saying she's a kid. Like
when I was a teenager, I never did that.
Were you buying bags as a teenager?
I did buy a few.
I wasn't buying bags.
I wasn't buying no bad shit. I got them out of bags.
I'm different. I'm sorry. We just
old school.
You know what I mean?
Old school.
Because here's the thing. There's still a representation of you.
But what I'm saying is that you act your wage.
All right. So in your 20s, and a girl got a Coach bag. I know the answer.
Coach makes good leather. The signature Coach, the seasonal that
is fire. Yeah.
Like
the driving glove,
red bag with no logo on it.
Leather.
No, Coach makes good leather.
So what we have? Michael Kors, then Coach.
Yeah.
C.
Yeah.
Then YSL.
Oh, no. Well, you know what? I don't really see too many good Gucci bags.
That's what I'm saying. That's why it's lower level.
Yeah, Gucci
rad shit.
Yeah,
rad cool. Especially the signature.
They got some of my favorite sneakers. One of my favorite.
Gucci rad. No, it's good, but it's ratchet. Some of it is
Gucci bandana. When Soldier had that Gucci bandana on, it's over with. I was too. Yo,
Gucci's rad shit.
Yes.
All right. Okay.
Sorry. S&P.
S&P 500. So are we witnessing a natural market correction, or could this be the beginning of a broader downturn?
They lied publicly about 800,000 jobs, and nobody batted an eye. We're gonna have a correction.
When you say they, who you referring to? The administration?
50 Cent said, "Don't talk about the Fed go." Therefore, I don't know who they was. Sartini, who y'all meet with at CNBC, one of them said it. Frank Holland reported. Shout out to Frank. Frank Holland reported 800,000 jobs were miscalculated, right? Therefore, if those jobs were not there, we may have a slight downturn. Also, if America's debt to GDP ratio keeps increasing, while like if you were waiting for like a $600,000 house to have a lowest interest rate, great. They brought the interest rates down a little, but now the house is $900,000. Not favorable. Credit card debt is at an all-time high. We're paying $2.5 billion in interest per day on debt servicing. So as a result, the market is going to come down. And when the entire market is riding upon if NVIDIA is able to produce at a high level, like it's never good when the economy is geared towards one company. Rashad, you can even go back to 2008. I know everyone wants to bring up sector rotation. There wasn't this much reliance on tech as the main driver for the stock market. Banking produced well. Oil and gas produced well. Natural gas had a segment. Tech was like the little kid at the kiddie table at Thanksgiving. Now we're so tech heavy and tech inflated. It's not a good sign. So I think we're due for a pullback or correction. We're seeing a mini recession in the chip space. And then as a result, the S&P will come down. I'll give you guys the prices for the buy and you'll be good. But like, we can't continue to have these crazy valuations and only 4 sectors are doing incredibly well.
Yeah, I think the environment is, inflationary environment. When you talk about rates, it makes sense why financials aren't doing well in this environment, right? Mm-hmm. So I think the next 10 days, I know like we were waiting for the NVIDIA earnings, and it was like I said, when you looked at the earnings and you combed through it and you listened to the call that Jensen had, it's on par. It's on par. It's not like they're saying something that would say, all right, this stock is too overvalued. Yes, the valuation. But if you look at the products and you look at the future guidance, you can understand it. But the next 7 to 10 days, we're going to see some economic data that will let us know that we're headed toward a downturn. CPIs this week, PPIs this week. The jobs report will be coming this week. And then next Wednesday, I'm sure everybody has it circled, we will be hearing whether a quarter or maybe a 0.5% of a cut on interest rates. And then on Friday, there will be quadruple witching. And so when you're talking about all those factors happening in the next 7, 10 lined up, we already talked about the volatility inside September and October. Seatbelts on. But this is the time. So I know I gave that statistic earlier about September being over the past 10 years, as far as the S&P, as far as the entire market being the month that has the largest pull down. But in turn, November, we see almost a 3.5 to 4% increase over the past 10 years. And so if you're looking at those two things and you say, okay, well, we know we're going to have pullback in September, October. If you get in the right places now, by the time you get to November, you're going to see a percentage increase, right? If you find from these bottoms, you're going to have an increase, and then you can ride that out into the fourth quarter. We've seen the Christmas rally actually happen over the past 2 or 3 years. So the other side of the road, there's a promise, but you got to actually have to bear this. This is part of it. This is part of it. You just talked about NVIDIA having the worst day in the history of any company. The S&P last week, the worst week since I think 2022. This is part of it. This is part of it. I'm glad people are in the market. They have their brokerage accounts and they've invested money so they can see some pullback. But on the other side of that, there will be gains. You just got to be patient.
If you've been waiting on the sidelines, this would be a great time to buy. Quick question. Which are the 2 biggest economies in the world right now? Cue the Jeopardy music. Mm-hmm. And if those 2 biggest economies are both going through a slowdown, is the stock market going to go up or down as a result? Put it in the comments. Put it in chat. China's going through an economic slowdown. The Nikkei slid. like Glorilla did on that beat. 9 p.m. on Friday. If J Powell don't cut, it's going to be 95 degrees next Wednesday.
If he doesn't cut, that might
federal.
Yeah,
emergency meeting,
emergency episode.
J Powell, I know you had the toughest job in the world right now, but man, half a basis point would be great. Need a quarter. If you say 0, man.
So
y'all think Tekashi fell off was hard. This market gonna dive.
Well, potential 20%.
20. You think 20?
Okay. A quiz question. This is one of my favorite investor questions. What would be the catalyst for the market to go higher when the richest people on earth and hedge funds are not even talking right now?
The catalyst. Okay.
What would drive it? If it's not NVIDIA missed, Blackwell's not going to produce. Intel,
what if we hear something in the political world that's favorable?
They're not going to do quantitative easing again. That's the only thing that'll do it.
Yeah, I'm just thinking like 'cause we didn't factor in the election. Like that would be a catalyst, but I feel like that might have been by that time it'll be factored in by the time it gets to the election. So what would be the catalyst?
When you don't have an easy answer, like, hey, what do we need to do to fix this? Going back to what the brother said, we need to solve a problem. Okay, great. What's the catalyst that would drive the American economy higher? And most people are blank. Credit card debt are all-time high. Mortgages, car defaults. We'll maybe talk about it on Blackout. Even like the cost of living, let's just say in New York. I know the New Yorker had a piece about the nanny situation and the rising cost of debt. Like most people are being priced out of a great living experience in America, and the entire market is riding on AI, in which most companies that are talking about AI haven't generated shit in the AI space. But you have maybe 5 great players in this. Yeah.
It's tough. Right? If we're thinking of the catalyst, 2 years ago, we couldn't have said that AI was going to be the catalyst. We wouldn't have known. The obvious catalyst would be the interest rate cut. We couldn't have said that it got
to be a deep.
Right. 2 years ago, NVIDIA's trading at 127 or 130 something.
And then at the top of the year, you actually was my top stock of the year. I said NVIDIA.
But the AI economy that's been created around it, right? That would have been tough. Let's say 3 years ago, that would have been tough to predict.
Can we be honest?
We said that the AI companies.
Yeah. Most of the AI economy they haven't produced. Great. A lot of funding has went there. Outside of ChatGPT, Midjourney, who am I missing? Anthropic. This the big 3 that count, Kendrick. The rest of them, they underdelivered what Canva did. I want the new Photoshop. No, that's not there. Capabilities are not there.
Gemini's in there. I didn't even realize I was using it the other day. You go on Google search and Gemini comes up automatically now.
So 4.
Yeah.
So, and that AI wave is all the capital that left crypto and NFTs, and that money flowed into that's the real sector rotation y'all don't want to talk about. The death of them fucking NFTs when y'all told me I was wrong. Well, I really know. Okay, and then it went there. And if we don't have a boom in AI, it's going to rotate to something else. So we're just in a very, remember when Jordan left and it was Pete Myers and Randy Brown? Shout out to Randy, love you, but that wasn't going to get the job done. We're at the same place in the stock market. We got flu and a possible. Listen, they weren't even look at the IPO market. What is IPO to value? Last 18 months.
That has slowed down
dramatically.
Yeah, it was at its all-time high in 2021, 2022. And then, now, I feel like every month there was somebody that had an IPO. You saw SPACs, and it was now that's slowed down a bit.
The altcoins are moving as fast, which I think they'll move in next year. But in IPO space, SPAC space, Angel space is slowing down. Stripe didn't go public. That was a canary in the.
Stripe didn't go public.
Right? I'll let you know. Yeah,
what you're saying is that Powell has no pressure next Wednesday. No pressure, really.
Praying for you, my boy. Ooh, meditate, get on the Calm app, breathe in deep. The world needs a 50 basis point cut for us to be able to thrive.
Let's do it.
Yeah. But I don't think he's going to give that. I think he'll give a quarter.
Yield curve union version.
This is the crazy part. So the yield curve is an indicator for recession, but they told it wasn't a recession. But as soon as it uninverts, it's news. I don't even know what to do. Because if I run out of gas and I have no gas in my car and I tell you, we're fine, we're still traveling, but I'm just going off the momentum I built up on 285. There's a lot of media engineering behind this. Great news. Will go even better if he cuts a quarter of a basis point. But we were inverted for 18 months, 20 months. No recession. Can we just lie in media now? I know a lot of people have been doing it in their YouTube reviews, but just flat out lying, no, this is not happening. But when the signal uninverts, now it's oh, we're in the clear. In the clear what? I thought we were not in the recession. What happened? I missed the hard journalistic reporting and just being honest across the board. I really do.
So does it mean that there's going to be a healthier cycle or an uptrend? I mean, if you waited to report, you changed the rules a little bit, it finally has got to a point that's favorable for you to report. Should we now, or I shouldn't say we, should the general public look at this as an indicator to say, okay, I believe it now?
Yeah, the worst is over. We should have more to the upside. A couple of those companies getting kicked out of the S&P was indicative as well. So I think it's a few. Some needs to get kicked out the Dow as well, but
that's true.
Brighter days are coming. Definitely, I think going into next year, if we can get through 25 and 27, we'll be okay. But if you look, with the exception of the gains from COVID, we've been flat since 19. A lot of innovation. Just take the drop of COVID and recovery, right, which played a big part in our lives. But take that out, most companies have not done incredibly well. And the crazy part, Elon on his way to being a trillionaire, and Tesla's not moving that much. Talking about building an indestructible business. He's part Dutch too, right? Import, export.
So, we had American Airlines got replaced. I know you were just alluding to that. Companies that got excluded out of the S&P 500. Etsy, which was one of those pandemic darlings, and Erie is going to replace BioRoad Laboratories. September 23rd, that takes effect.
Etsy should have never been in the S&P. We're going to be honest.
That was a quick run right into the S&P, right?
Yeah, that's tough. Grand opening, grand closing. But what about? I think things can get better.
What about SMCI? Got downgraded by JP Morgan.
Supermicro.
Y'all remember? Well, of course, y'all from New York. Remember the era when everybody was trying to rap like Hov and then Hov put that black ball on them like somebody else he did? SMCI was a great benefitor of NVIDIA and the rise of ASML. I don't think they've ever should have had this run up. To be honest, they got to 1229. Oh, so what? A year prior, they were at 182, and no one on earth can tell me why they deserve to go from 182 to 1200 other than the space was hot. It reminded me a lot of the NFT and parts of crypto. Do I think it's a great company? Yes, but to go up 11x. So downgrade has been overdue. If they go to 261.
So no. I'm a fan of SMCI, and it has to do everything with NVIDIA. And when we broke down the economy that's being put around NVIDIA, when we talked about data centers and what you should be looking to inside of data centers, we talked about cybersecurity, and we also talked about servers.
Yep.
They are one of the companies that help produce high efficiency, high speed servers for cloud computing, for artificial intelligence, and for storage. And so if you keep seeing these companies and you hear data centers, that's a ignorable part of it, right? Like you have to have those in order for them, number one, to house them, but to also store the information. The pullback is interesting. Obviously, we've seen NVIDIA drop 30% and go down to, I think it was at 105 today. But the problem with SMCI is the numbers and
ugly.
The potential fabrication of numbers, which has hurt the stock. And
media training, that's a great phrase. Potential fabrication. Well played.
Right.
Well intended.
Yeah, because it's tough to have a fair valuation. It's tough to have a fair guidance going forward if the numbers are potentially fabricated. That's what's hurting it more so than its functionality, because it is going to be needed. It is going to be a company that obviously NVIDIA has partnered with, and so its growth inside of data center units, you'll see it inside there. But we got to get these numbers together and expeditiously, because if you have a pullback, that could happen, right? If let's say rates don't get cut, and let's say which in September does what it does, October does what it does, we're talking about a drastic fall.
Bloodbath. And anytime a company gets to doing financial engineering, like even for them in the space, their gross margin is 18%. Their profit margin is 8.9%. When NVIDIA is bringing in 40%, they had a 25% drop. So if you have a profit margin of 8%, you should be down 70%. We just gonna flat out lie. We'll flex it. Y'all lied. Y'all worship this company. They're not NVIDIA. NVIDIA dropped 25% from its peak with a profit margin of 42%. Their profit margin is 8.9. The math ain't mathing. But what do I know? Shout out to SMCI. Strong, steady wins the rate. Go back to the old lesson. You say, Rashad, hey, 30, 40%, still 30, 40%. If I told you I have a company, so let's say I went to the pitch competition, and if you invest in me, you get an 8% profit margin per year, but I'm going to make you pay a multiple of 11 of, you say, get the fuck out the room. You want me to pay a multiple of 11 for 8% profit margin? Fly kite. What? No,
are you not touching the stock at all?
On swing trade long term, I would never touch it.
Okay.
Anytime you get to engineering them numbers,
it's tricky.
Shotty, you stole my crystal ball last week, that DOJ probe, and I know Jensen said it wasn't true.
That's right. Like we said, sometimes you get too hot, and then the alphabet boys come looking. Allegedly. And
it's even worse, Shotty, be like, yo, was CIA at your door yesterday? No, I think they wouldn't. Even having to ask the question bad. If he'll offer it up, now if Jensen would have offered it, I would have been like, all right, cool. The denial of the probe? Come on, bro.
They have denied. They have denied that there wasn't any probe at all.
What are 3 rules for trading options?
I got to swing this to Troy. Pause. Is that a pause moment? Going into the... I love the show. I swear to God. Going into the fourth quarter, what are 3 options rules you think people need to obey, given how tricky the trading environment can be? And I'll go over it on the future side too. But depending on if he cuts rates, if real numbers start to come out about some of these companies, what are 3 rules you think they should follow?
Well, I always tell people if they're going to have options contracts, they should understand the equity itself, right? So if I'm going to have an option on NVIDIA, then I better own some NVIDIA because the volatile moves that'll happen in options, they can wipe you out. And so I've shown my portfolio inside the university where if it's Microsoft, you're going to see a call on Microsoft. If it's Apple, there's a call on Apple. If it's TSM, you're going to see calls on TSM as well, just because I own the equity and I have the options contract. So that's the first thing. The second thing is that you have to figure out your threshold for patience. And that's something that I've had to learn a few times, but it's a valuable lesson that's learned, right? And it's the reason why we like to do leaps and we don't do day trades and we don't do swing trades. And I know they got what's the new one, like you can sell them with contracts within an hour. That's number one, I just don't have the time, obviously, with everything that we have going on. But when I put leaps in inside of my contract theory, it makes more sense for me, right? I can justifiably see a 5% move to the upside. I could see a 10% move to the upside based on future guidance. So that would be number two, having a patience threshold. And then understanding your strikes, man. The strike price is important, and understand how the bid and the ask are formulated. I never want to buy something at its ask price. I told people it would be like walking into the dealership and somebody telling you the top dollar for the car, and you say, all right, I'll take it. I'm always looking at the price that I feel like is necessary or it fits into my investment strategy, right? I always want to have it at least 5 to 10% below that. And so I'm going to put my limits there. And if it goes over, I won't get it. But if it comes to the point where I can buy it at that limit, then great. But being patient enough to know that if it doesn't hit today, then I'll try again tomorrow at that same price. A lot of times we'll see companies run up and we're saying, oh my gosh, I got to get it now before that. As you can see, if you have the patience, the numbers will come back. I know, like, even when you said 107 for NVIDIA, I remember I said 112 and it was sitting at 135 and people are thinking, there's no way this is going to happen. And then
every time you say that,
and it happens. And so having a strike that makes sense, understanding the ask and bid is important, but having that strategy and being disciplined enough to execute the strategy, I think those are the keys, especially going into the fourth quarter, especially now that we know September is volatile and then we see the end of the year. We're going to potentially see some increases. You got to have that.
And going back to SMCI really quick, not to pick on them, shout out to everyone there, corporate and at headquarters, but I think a great tip is to look at what the average 1 year target is expected to be. If you look at a lot of analysts, which I only care about my price and I don't care about anybody else's, but it helps illustrate a great point. Because some analysts, they have SMCI going to $38. You go on Walmart right now and look at it. 38 to $70 is the range that they're projected to be at. Now, could it be off? Cool. But anytime an analyst from any major 10 firm is predicting at 80 or 90% drop, that's not good. Or if you're doing cost, now if you're doing puts, run it up. Run it up. But I think you should know what those 1 year price targets are looking like to give you a clue about what the general consensus is on the street about that stock.
Yes, sir.
And they have a stock split coming up.
They're going to have to do a 70-1 split to make the
They got to
rework them numbers, my boy.
I think it's on the 1st of October. Let me just double check.
Yeah.
That'll be Halloween Havoc if y'all get this right.
10-1. 10-1.
The Super Bowl thing is really gaining a lot of traction. Nicki Minaj,
she commented?
She put a whole tweet series out.
You saw Master P?
Oh.
Master P was done tastefully though.
Yeah.
She went for the juggler.
She went crazy. Whoa, hey. Shout to the Barbs.
Young Money raised me. Grew up out in base.
Yeah, we're gonna talk about that because that's a lot of it's
a lot of lessons in that, man.
I don't think it's as clear cut as people making it out to be, but it's a lot of lesson as well. It's a lot of lesson.
A lot of layers too.
Layers. Multi-layered situation for sure. Multi-layered. Okay. PMI hits 8-month low. First, what is PMI and why is it hitting an 8-month low? Is it concerning? Does that show signs of an economic slowdown? What's the deal?
Yeah. It's a manufacturing indicator. It hitting the 8-month low does concern me. One of my favorite things to do is when I go to major cities is just like go through some of the industrious areas and see how productive they are. I think over the next 12 to 13 months, like reports can, because I know people say from Hove, men lie, women lie, numbers don't, but you can skew data to make it tell an untruth. I think over the next 12 or 13 months, we're going to get a lot more insight about how our manufacturing is really going in the country. And I think once they begin to tell the truth about how the numbers are looking, we can then course correct. This is why, like, Powell right now has the toughest job on earth because his decision is going to affect every industry in our country. And I would not want that job. But yeah, 8-month low. I hope things start the course correct, but it's a number I would keep my eye on, especially for my traders. If the PMI is not coming in, of course, there's certain industries and sectors you can trade and short to the downside, but just keep your eyes on it. It's, I think, something everyone needs to put on their watch list as far as an indicator for how the country is doing.
Yes, sir.
I didn't get to go over at InvestFest, so I figured I covered it here.
Thank you.
Appreciate you, man.
Appreciate it. Appreciate that. Okay. And U.S. construction spending on the decline. Off that, what we just talked about, as far as that's an indicator, right? As far as if construction spending is falling more than expected, that means that there's a lack of demand for build, right? So is that another indicator that this thing is starting to fall apart?
This is why that cut matters a lot, because of course, like if you have construction costs and then if the rates are too high to borrow the capital to complete the project, half a point basis cut makes a difference. Even for me, like when I go to New York, like the biggest indicator for me was the lack of full development on Hudson Yards. Beautiful. It's not everything that it was supposed to be because of the timing. A lot of projects have been halted in Chicago as a result. So if construction is going down, manufacturing isn't doing as well. NVIDIA missed earnings, and the numbers were amazing for any other company. Imagine if they missed by 10 billion. We would be in shambles, yo. So you gotta keep no one's, and we always give vilify, well, you guys aren't an economist. You're out of touch. I'm in more touch than you think.
Well, call Steve Lisa. He's an economist. He'll tell you the same thing.
Yeah, let's call my guy back. Hey, real quick, like, what are we talking about? Like, there are, and for full disclosure, hedge funds and banks are not politics, religion, banks, never mind. So yeah, keep your eye on the indicator. I'm learning.
Learn your indicators.
Yep, learn your indicators and learn what to be.
PMI, PPI, CPI.
Yep. PMI.
Before we leave, we're going to bring up a guest. We have the honor of having the CEO of Bevel Brand, Damon Frost, with us. So we will bring Damon up to the screen. Damon Frost, how are you, my brother? How you doing?
My brother, how are you?
I'm good. How you doing, man?
Good.
Very good.
So, Damon is the CEO of Bevel. If you guys aren't familiar, Bevel is a men's grooming company.
Yeah,
sure. Bevel really, to me, hit my radar probably about 5 years ago when Nas had started rapping about it. I think he was an investor. That's when Tristan Walker was the CEO. And they were one of these companies that was revolutionary because it was wireless. At the time, a lot of clippers were not wireless, and if you travel, especially when you travel overseas, Europe and stuff like that, you can't plug. The first time I went to Germany, I tried to plug my T-liner in, and it blew the thing off because the electricity is, and even if you have a converter, it still does it. It's not the same. So having a portable is something that's very good. And then the blade was different technology. So Tristan Walker, the original founder, he sold the company, I believe, like 3 years ago.